stock is completely speculative, right? The price of the stock, nothing says, like, obviously there's a market, it's market capitalization, right? How much the amount of money that the stock actually possesses in terms of dollar per share, right? But the stock price of a company has really not much. It has a speculative value to do with the worth of the company. It's not a definitive value. You get it. For instance, Apple, has, let's say for the example, 50 million shares, right? They got 50 million shares, and if they're trading at 180, you times 180 by 50 million. What is it? 9 billion or 9 trillion, right? So, but Apple doesn't have a $9 trillion market cap, right? And that's what I'm trying to explain. The price of the stock is speculative, right? It's speculative. You're looking at something like Apple, who has close to $1 trillion market cap, or whatever, and you're saying, oh, it has $1 trillion market cap, it has this many shares out, and the price is currently trading as this, right? You're drawing a comparative. You're doing some type of comparative analysis to gauge whether or not the price is being accurate. Either it's being more accurate or less accurate than what the actual, what I call the intrinsic or true value of the stock actually is, right? So like I said, there's the true value, right? This is what I call essentially the mean, right? The mean of a stock, the deserved price. And then there's a speculative value, right? And the stock price that it's trading at is always based on speculation, right? Don't get me wrong. Like, when Cypher, you have to press the microphone button, Cypher. Don't get me wrong, like, there are certain times, fuck, I got distracted. What was I saying? Oh yeah, it's all the price of the stock that's being displayed is speculative, right? So, like I said, there's times when news is going to affect the price of a stock, right? It's going to affect sentiment. But to sit there all day, like somebody sent me yesterday, they sent me a 32-page report a 32-page F2 financial statement of a company, and said, "Hey Frank, would you mind reading through this and letting me know what you think?" And I literally looked at this person. I mean, I didn't look at them; they sent me a message. But I'm literally thinking in my head, I'm looking at this person, I'm saying, "What the fuck are you doing with your time that you're going to spend?" It would take me an hour, 2-3 hours to read every single page and to dissect it and to tell you, if this is going to be bullish or bearish for a stock. You think that I have that kind of time on my hands? You guys really think that that's what I do with my time? No, absolutely not. Before I go studying any type of news, before I go looking at any news whatsoever, you know what I look at first? The price of the stock. Because I don't know if the news is going to affect the price of the stock to one extreme or the other extreme. For instance, I don't know if the news coming out is going to send the stock price exploding or declining drastically, right? If I don't know what the current price of the stock is, what the previous price of the stock was, and I draw that type of comparative analysis to the point where I could say, oh, now I understand the total sentiment of the stock, now I can gauge whether or not this news is either going to be bullish or bearish for the stock, right? It all depends on the environment or the current speculative price on the stock, right? That's why when you get news sometimes, for instance, I don't know, any type of news, earnings, whatever the fuck you want to call it, you get news, right? And the price of the stock, so let's say, give an example, right? So let's say I own a lemonade stand, whatever, I franchise a lemonade stand, I have a public lemonade stand, and I sell shares of my lemonade stand for $10, right? So I give everybody out $10, everybody a share for $10. Everybody gets shares for $10. I IPO at $10. And I'm on a lemonade stand in the corner of California here, and I'm serving 400 cups of lemonade a day, alright? So, here's my company. I'm a lemonade stand. I sell 400 cups. Right now I'm selling 400 cups of lemonade, right? And I'm selling for 25 cents each, so what is that, $100, right? So I'm making $100 a day. Oh, mute your mic, guys. I'm getting feedback here. Hello? There we go. Thank you. So here's my lemonade stand, right? I'm making $100 a day, and I just IPO'd, and I'm giving these shares out for $10, right? The actual value of my company, let's say I distribute 1,000 shares, right? I IPO 1,000 shares. If I sell 1,000 shares, right, of my company for $10, hypothetically, speculatively speaking, right, my company is worth $10,000. Make sense? Pretty basic, right? Sell 1,000 shares for $10 each. I retain $10,000. Now, holistically, if you're going to say, hey, Frank, how much is your lemonade stand worth? I'd say $10,000. My business is worth $10,000, right? So, here's my business, $10 a share, right? 1,000 shares, and this is my business. I'm selling 100 cups a day, I'm making $100, right? Now, let's say Ice-T, the rapper, or whoever Ice-T is, the rapper, shows up at my lemonade stand, tries my lemonade, and says, holy crap, this is the best lemonade I've ever had. And I say to him, you like my lemonade, Ice-T? You're a famous guy. A lot of people like you. I think if a lot of people like you, a lot of people like my lemonade, I should bring the two together, right? That's marketing, right? So I'm going to I say, how would you like to endorse my lemonade, Ice-T? And Ice-T says, I would love to. I love this lemonade. That's fantastic, right? So now, my lemonade stand, I was making $100 a day, right? Ice-T shows up to my stand, says he likes my Ice-T, goes on his Instagram, goes on his Facebook, goes on, all of whatever he does, gets to all of his viewers and says, yo, you have to try Frank's lemonade. Go to the lemonade stand in Hollywood and try Frank's lemonade. My business, right? I was selling 100 cups a day. Now I have Ice-T's endorsement. Now, instead of selling 100 cups a day per average, the next week I open my lemonade stand, the line is through the door. It's through the fucking, it's down the street, rather. There's so many people lining up to try my lemonade stand. And that first day, I sell 500 cups of lemonade. Right? Everybody with me? Somebody just posted in the chat, yes, I'm with you. So
Frank, I just made a channel called Classroom Floor for us to use. FYI.
Oh, okay. Where is that at?
Right above Trading Floor.
Okay, cool. You said right above me?
Yeah, it's called Classroom. I don't think it's...
Oh, I see it. I see it. Perfect. Thank you.
Yep.
Yeah, if you guys have any questions, don't use the chat box. Just use the Discord. I mean, if you're just enjoying me, obviously use the chat box. But so, where am I at? Ice-T bought my lemonade. He's endorsing my stand. First day, I sell 500 cups of lemonade, right? If you were to stop right there, if the world were to freeze, like absolutely stand still. Skyper, you gotta press the mic button or something. If the world were to freeze right then and there, and you had nothing else to go off of, you said, oh my god, now Frank was selling 100 cups of lemonade, today he sold 500 cups of lemonade, right? And you froze time. Hypothetically, what will happen to my stock price? Just given the one example, 1 day of price action, 1 day of my company operating with the new news, right? That's what news is affecting the price of my stock, right? Because now the news has either negatively affected the profitability of my business or positively affected the profitability of my business, right? So, given the example, if Ice-T says he likes your lemonade, people will come to buy lemonade. It's a positive type of news, right? This is a positive injection. This is a catalyst, right? Now my company goes from selling 100 cups of lemonade to selling 500 cups of lemonade, but only for that first day. We froze time. We're only on the first day. So just based on this first day, right, my company, like he said in the training chat, is hypothetically, in a perfect world, now my company is worth 5 times, right? Because if I was selling 100 cups per day on average, and my company is worth 10 grand, my shares are worth $10 a share, now I'm able to sell, on average, just off of the 1 day, I'm selling 500 cups of lemonade. Yes, guys, volume is lemonade, cups of lemonade equals volume, right? So that next day, I'm selling 500 cups of lemonade. My company is now worth, essentially, hypothetically speaking, 5 times what it was worth, right? Makes sense. You're selling 5 times as much you're selling 5 times as much product, you're 5 times as profitable, right? That's in a perfect world, hypothetically. Now let's take it into reality. The reality situation is, do you think that Ice-T absolutely loved my lemonade, and he's doing all of this advertisement and endorsing for free? Absolutely not. He charges me For every cup of lemonade I sell, I give iced tea 1 penny, right? So if I sell a cup of lemonade for 25 cents and I give iced tea 1 penny, he is essentially a 4% residual return on my proceed, on my gains, right? So, but nobody knows that, right? People who bought my lemonade, the $10 a share, it goes up to $50 a share, and they're saying, "Wow, this is fantastic. Frank is now selling 5 times as much lemonade. Now my shares are hypothetically worth $50 a share. This is great." But like I said, not a hypothetical situation. In reality, I have to give iced tea 4% of my 25 of my profits, right? So this is where it gets tricky, right? Because nobody knows that I'm giving iced tea 4%. I could be giving iced tea 5 cents per cup. I could be giving iced tea 10 cents per cup, right? So is the value of my company really worth 5 times? No. My value of my company would be worth 5 times if I didn't have to pay iced tea anything. Okay, sure, right? If my overhead costs, if I didn't have to hire more people to serve lemonade, if I could maintain the size of the stand that I had, like I said, my operational costs, my overhead costs, my profitability per cups of lemonade remain the same, yes. But that's not the example, right? And this is why I say you're wasting your time. If you're looking at news and you think you know exactly how it's going to affect the stock, you are so foolish. You're the most foolish that you can possibly get. Because you'd have to be literally inside the company. You'd have to be the one who's the creator of the news. Like, you're on top of the news that's happening. You're the head of that district. You are like, you know everything that there is to know. That's the only possible way a piece of news comes out and you say, "Oh, I know exactly how this is going to affect the price because I know what's going on behind the curtain, so to speak," right? You don't know shit. You don't know. You have no idea what's going on behind the curtains. So to sit there and to open an article and say, "Whoa, all this, all that," you're wasting your fucking time. I literally open an article, I breeze through it, and I say, it's literally this simple. I say -3, -2, -1, 0, +1, +2, +3. It is literally that simple. It's so simple that if I were to hand an article to my baby nephew and say, "Tell me what you think of this article. Give me a -3, a -2, a -1, a 0, 1, 2, 3. He could probably still give me a relatively good answer. That's how simple this scaling system is. It's that simple. Don't get me wrong. Over time, like if I did that to my nephew every single day, do you think that he's going to get better at doing that? Absolutely, right? So for me, like I said, I browse through an article, and I assign it a number, and I have a pretty good idea, or I like to think that I have a pretty good idea that I read the news, I understand the news, and I have a good idea, or my idea, not a good idea, right? Good is a relative term. We have no idea what good means, right? So I think that my idea, is correct. I have faith, confidence in it. And now I'm waiting for what? I have my idea. I see the news. I have my idea. Guess what? That's all. Ideology, hypotheticals. All this is theoretical. The reality of the situation is what? What happens to the price of my stock? I'm not trading how you think. I'm not trading how you feel. I'm not trading whether or not you think that the company is going to make, $100 million off that lemonade thing. That's not what I'm trading. I'm literally trading if that's what you think. If the general consensus is now I've endorsed iced tea and my lemonade stand is going to explode through the roof, right? Don't you think that the price of my stock is going to reflect that? Of course. So if you're watching the price of the stock and you're seeing the volume and you're looking at it, for me, what do I need to look at the news for? I never look at news, guys. Very rarely do I say, unless I get a significant move that adds to my level of uncertainty, I have no reason to look at news. I could give a shit less what the news says. I give a shit what the news says for something like FOMC, right? Something like, the Fed minutes, that has a drastic effect on sentiment. You're talking about the entire environment in which the United States economy operates. We have news on that. That's huge, okay? That kind of news, I look at it and I say, okay, right? I consider it. I may spend a little bit more time looking into it, but the overall ideology and concept stays the same. Like the Fed minutes from yesterday. Monraj came on to The Voice today and said, "Frank, weren't you bearish on SPY yesterday?" I said, absolutely. When we were leading into the Fed minutes, and I'm expecting, the minutes to come out, and be, so dovish or so bearish for the market, right? If I'm expecting that, I'm looking at the price action on SPY. I'm saying, yeah, I'm bearish on SPY right here. Because for me, at the time, the general consensus was, if we're selling off SPY, guess what we're thinking? We're thinking that the Fed minutes are going to be dovish, right? That it's going to be bearish for the market. The market will continue to decline, right? So let's say, for instance, just using this as an example. Sniper, I don't know what's wrong.
Yeah, I'm helping her. I'm not sure what the problem is. It's the same as it always is.
Okay. So, fuck. I keep losing my train of thought. What was I talking about, Ziggy?
You were about to pull something up on your computer to show an example.
No.
Someone help him out.
What was I saying? Damn it. Oh yeah, the Fed minutes, right? So that's serious news. So even with the Fed minutes, I was bearish on SPY, right? So if you said, oh Frank, how bearish on SPY are you? And I'd say, I'm a -2 on SPY. Give it -3, -2, -1, 0, 0, 1, 2, 3, right? I'd say I'm about a -2 on SPY. So -3 being super bearish, 1 being slightly bearish, and 2 being moderately bearish, right? So I went into the Fed minutes with the ideology that it's going to be, moderately bearish, right? We go into Fed minutes, and what do we get? Did we get a moderately bearish Fed minutes? No. We got a moderately bullish Fed minutes. We didn't get a 1. We didn't get a slightly bullish Fed minutes. We didn't get a 3. We didn't get an overly bullish minutes. We got a 2. So for me, I went into there with a -2, and instead I got a 2, right? So that for me is a wake-up call, because the general consensus was that it was going to be bearish. So in my mind, I'm drawing a little ratio, and I'm saying, okay, general consensus is that this is going to be bearish, and SPY was doing this. Then I get the actuality or the reality of the situation, and I post up the Fed minutes. I say, okay, SPY was doing this because we thought it was going to be this bearish. And like I said, I don't know if I'm right? I don't know if my -2 is accurate. I could think that it's -2, but for the reality of the situation is that the general consensus could have thought that we were -3, right? So I don't know how right I am. I just have to go off of my own experience and my own perspective to try to gauge it, right? So, like I said, so if we go from 0, if I go from -2 and now I get this +2, do you think that, I'm going to look at that and I'm going to say, oh my god, I'm still -2 bearish on SPY? No, dude. I look at SPY, I get a +2 when I'm expecting a -2, and you know what, in my head, do you know what screams in my head? I immediately think short squeeze. Immediately. Because if the general consensus is that we were -2, which is moderately bearish, and we got moderately bullish, even if it's neutral, in other words, even if you draw a conductive average between the two, the -2 and the 0, the -2 and the +2, you still get 0, right? And if you're looking at SPY and you're saying, okay, Fed minutes come out, we were in and up, we were grinding upwards, right? Making a move upwards. We depreciate down based off of the preemptive move that this is going to be moderately bearish, and then we get moderately bullish. So even if I have no fucking idea what's going on, and I just say, oh my god, now this is neutral, even then, I'm looking at SPY and I'm saying, the only thing for SPY to do up, the only thing for SPY to do now is, guess what? Move up. Why would SPY move down? The only way that SPY would move down, SPY wouldn't even move down if we got -1 move. If the general consensus was -2 and you got a -1, do you know what would happen to the price of SPY? It would move up. Because the general consensus that it was going to be moderately bearish. If you come in with slightly bearish news, that is bullish. It's inherently bullish, right? This is like, a lot of this you need to understand. You need to think about it, and you need to understand what you're doing. If you don't understand what you're doing, I can literally hand you my trading strategy. I can literally give it to you, and you will fail. You won't fail today. You might not fail tomorrow. You might not fail the next day. But in 2 years, in 3 years, in 4 years, in 5 years, in 6 years, you will fail. Because if you don't understand what I'm doing and why I'm doing it, it's like it's like giving a man a fish for a day, or teaching him to fish. I can give you guys all of the trades that I want. I can say, oh, I'm buy this here and sell this there and buy this there and buy this and sell this there. That does nothing for you. The only thing that does for you is if you're able to execute and I'm correct, you make money, right? In the moment. But if I die, if something happens to me tomorrow, I get, sidetracked, I get sidetracked or I got something going on and I'm not here, does that mean that you can't make money? No, that's not what that should mean. But if that's the reality of the situation, you're a pleb, in my opinion. And that's like why I look at other trading rooms and I see buy here, sell here, stop here. And I hate that. I hate that. You can give all those people... I'm not saying that people don't make money in those chat rooms. They most certainly, some people do make money. But a majority of them lose fucking money because they don't know what they're doing. Even if you give it that simple structure of buy here, sell here, stop here, people will still lose money. Because reality of the situation is because, guess what? They don't know what they're doing. Like I said, might not be today, might not be tomorrow, but it will happen. And you don't want this to happen to you. What you want to do is you want to start with a stick, pick up a stick off the ground, right? You pick up a stick off the ground, and you say, I have a stick. Then you say, okay, I need to turn this stick into a fishing pole. I can take this stick, and I can whack a fish over a head, and I can eat. Or I can turn the stick into a fishing pole, and I can continuously fish and not brutally kill fish. Like, why would you spend the extra energy to take a stick, go clubbing fish to try to get a meal, where you could just craft the stick that you picked up into a nice little fishing pole, and then anywhere you go, you're going to be able to fish, catch a nice fish, go out, buy your wife a nice ring, get her a dinner, treat yourself to whatever the fuck you get, and it's going to be a nice life. That's what I want for people. I want people to be able to say, I need $500 to cover my rent. Let me just go to the market real quick. Tick, 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 tick. Thanks for the $500. I'm paying my rent. That's what I want. I want people to be able to do whatever the fuck they want because they have the tools and the skills to pull a fish out of the fucking ocean whenever they want it. Whenever they want it. That's where the value is. That's what your goal should be. Your goal should not be, Frank, hand me your fishing pole so I can fish. What the fuck? You take my fishing pole, you're not going to know what to do with it. It's my fishing pole. You need to make your own fishing pole. If you think that mine looks good, then just make yours to look like mine, that's all. But you have to make your own. You have to. Otherwise, you're going to take the stick, and you're going to be trying to club fish for the rest of your life. And it's a waste of time. It's a waste of your time, and it's a waste of my time. Because every day, I'll have to walk up the hill to hand you a fish so that you get fed. Why would I waste my time? I got so much better things to be doing. I want to teach people how to fish. If you want to learn how to trade, I will teach you. If you want to learn how to just follow stock, trade calls, I have thousands of rooms. Feel free to message me. I have hundreds of rooms who will gladly take your $19.99 a month, your $50 a month, and they will give you all of their alerts. Gladly. They'll do it for you all day long. They'll do that for you till the end of time. You pay that $20 a month, they'll give you those calls till the end of time. They don't give a fuck about you. They won't even ask you if you're making money or losing money. They don't care. They're just there to collect your $20 and give you the calls. I hope you're profitable. That's shitty business. In my mind, that's shitty business. I like to take people, show them in, sit them down, make them dinner, treat people nice. Don't just, throw a dinner plate at somebody's face and say, here, eat it. How the fuck do you expect somebody to enjoy a meal if you throw a dish in their face and say, eat this? You're not gonna enjoy it. You're not gonna be happy. Today when I'm not gonna toot my own horn or anything, but I literally nailed the fuck out of SPY today, guys. Like, SPY and TVIX, if you're talking about entries and exits, like, literally, my covers and exits on TVIX and my longs and my exits were within the same penny. Do you know what that means in terms of, like, margin of error? That means that there was none. I would cover my TVIX short at 54.33, and I'd go long at 54.32. And then the price would rip up. I would never go red in the trade. That is good business right there. And you could see, during the day, I was super happy, right? I was freaking out. I was like, oh my god, I'm killing it. Because that makes me happy. To know that I'm doing that makes me so fucking happy. Because I spent years hoping that one day, I spent years sitting in stocks saying, oh my god, I have no idea what this stock's going to do. Oh, it's melting. Oh, I'm so... I'm sick to my stomach. I have no idea what to do. I'm scared. I have no idea what's going on. Now I literally sit in my computer, in front of my computer, and I know exactly what's going on. It is the best feeling in the entire fucking world. It's like literally, it's like taking the horse blinders, the blinders that racehorse wears. It's like if you were to have goggles on your face, blacked out goggles, and then one day you take off the goggles. Like literally, you see everything. I literally, in the trade, some of these trades today, I literally see where I would have stopped out and the price would have ripped. I see where I would have been frustrated. You understand? Like, I literally see, I understand the realities that I'm not experiencing, and I appreciate that I'm not experiencing that reality. Now let's get into, Frank, how do I do this? Like I said, starts with the basics. Keep it stupidly simple. If you're just beginning trading, like I said, your main focus should be looking at a chart. That's your main focus. Because you don't know shit. You don't know how companies operate. You don't know how they function. You don't know fundamental analysis. You don't know technical analysis. You don't know anything. So look at what they give you. So everybody can see my screen, right? Somebody just confirmed. You see my mouse moving here?
Yep.
So this, I literally just went on Google and I typed in stock chart. This seems very basic, right? They're very basic. This right here, this is what makes a difference. Would you buy? Would you sell? Would you buy? Would you sell? These questions right here is the difference between a successful trader and an unsuccessful trader, right? Somebody who buys here, right? If you buy here, can't go wrong, right? Can't go wrong. But if you sell here, right? If you sell here, guess what? You didn't go wrong. It's not like you went wrong. If you made money from here to here and you sell here, it's not like you're wrong, okay? If you buy anywhere from $4, and this is another thing that I cannot stand. I absolutely cannot stand this. People asking me for my price targets and my entries and stuff like that. Like, obviously the entries I kind of understand because you want to know what I'm getting in. But spare me with the fucking price targets. Spare me. It's so fucking easy, bro. Like, it's literally, if you're asking me for a price target, you're literally saying, hey, Frank, I know that you're spoon-feeding me, but would you mind massaging my back, too? Fuck you. Do your own goddamn work. And a price target is very simple, right? If you buy here, if you buy right here, right? Anywhere right here, where's your price target? Right here. Here's my price target, right here. See where we start to consolidate? If we start to consolidate here, and this looks bearish to me, guess what we just found? My price target. I'll exit right here. I don't give a fuck. I don't care if the stock rips to $8. I don't give a fuck if the stock rips to $12. I don't care if the stock goes to the moon, right? If I buy down here and I sell right here, guess what I did? I made profit. That's my job. As a trader, my job is to make profit. My job as a trader is not to say, oh, the stock is at $4, I guarantee you it goes to $16. Nobody gives a fuck, okay? I don't give a fuck how right you are. Oh, that was so good of a call. You like that? How good is that? Phenomenal. Did you capitalize on it? Did you buy low and did you sell high? High five. That's what you get a high five for from me. Like when we were saying, you know, like, oh, you know, this, like, wasn't that a great trade? Yeah, it was a great trade. Did you make money? Yes. Congratulations. I don't care if you were right or wrong. My determination of whether or not you were right or wrong is your ability to make money, right? If you say, Frank, did you see that trade? And I say, yeah, that trade was a piece of shit. And you say, no, it wasn't. I made $500. Then you know what I say? Then that trade was worth $500 to you. To me, my perspective was that it was a piece of shit. But if you made $500, guess what? The fact that I think that the stock is a piece of shit doesn't matter. Because you have $500 in your pocket. So when I say the stock is a piece of shit, and you say, yeah, well, that piece of shit stock paid me $500. So that's what I'm saying. Your price target, your entries obviously are significant, but even this is what blows my mind, right? This is what blows my mind. People expect to get a perfect entry and a perfect exit. Do you guys understand that I've been trading and analyzing stocks for over 10 fucking years? 10 years. And if I get a perfect entry, like today on TVX, if I get a perfect entry and a perfect exit, I jump up and down in my chair with excitement. That's how uncommon it is to get a perfect entry and a perfect exit. It's so uncommon. I've been doing this for 10 years. I can count the times that I got a perfect exit It's out of a million trades, it's like 100. You know what I mean? It very rarely happens. That should not be your goal. Your goal should be this. My goal is to make money. My goal, if I'm longing a position, my goal is to buy the stock at a low price and sell it at a high price. So I'm going to get more into the stock now. I just want to help you guys understand the ideology. If you don't understand the ideology, then looking at the charts isn't going to help you. You need to understand the ideology, then look at the charts. Once you do that, everything else will fall into place. So this is what I'm saying. So if I bought here, right? If I bought here, no brainer I'm holding, right? No brainer candle. If I bought here, I'm holding, right? This is all no brainer. You get a slope like this and the stock is appreciating, no brainer, right? This is where you would probably sell. If you're a newbie and you bought here, you'd probably sell here, right? So you see this red candle here, these two lower wicks. This is a if you're an unexperienced trader, this is a shake, right? Formation is strong. They shake. Anybody who sold here, they hate themselves, right? They don't hate themselves because they made money here. They hate themselves because they're not going to make money here. Don't do that. Who gives a fuck? I don't give a shit. If I make money here and I exit here, I mean, don't get me wrong. I'm like everybody else. I look back and I say, fuck, I could have made a ton more money. But the reality of the situation is that, did you make money here? Yes. Then that was a good trade. That's it. It's as simple as that. If you do that more than you do, did you buy here and did the stock price go down and did you lose money? Yes. If you do the first one more than you do the second one, if you make more money than you lose, guess what? In the long term, you will be a successful trader. You will always make more money than you'll lose. Always. That's why in a day, like I had days where I lose tons and tons of money. I remember when I first started doing this, I started trading with them. I had a bunch of accounts consolidated, and for a short period of time, I was actually trading with $1 million account. I would make $1 million trades, and I'd say, I thought that the extra leverage would help me trade better. I thought that making bigger trades would mean that my trades would get better. You know what happened? The amount of losses I was taking were huge. I would take like $5,000 loss, $5,000 loss, $5,000 loss, $5,000 loss, $5,000 loss. And then I would see like a $50,000 gain, and I'd be like, oh my god, I have to take this. I have to, right? Because that $50,000 gain is going to pay for 10 of my losses, right? But my ideology, the psychology of me being down $5,000 was so significant that I just ended up taking, instead of taking 10 $5,000 losses and one $50,000 losses, I would take 15,000 $5,000 losses, and then I'd make 50 grand. Guess what? I'm down $25,000. Even though I was doing it okay, right? I was stopping out at a certain percent, taking my losses. I was doing it okay, but still, the psychological effect of trading with that much money, it killed me. It killed me. Now I have access to more than that. If I want to, literally, I can make 2 phone calls, have a bunch of people transfer money, link up some accounts. I could trade with $5 million if I wanted to. I don't need to. You know what I trade with? I have access to $5 million. You know what I trade with? 50K. Some days I trade with less than 50K. Some days I use 25K. Because I can make just as much money. It sounds silly. But it's better for me to have a confident ideology and a confident psychology and trade with $25,000 to $50,000 than to have a little bit of doubt or a little bit of unsureness and to trade with $500,000 to $1 million, right? And you're saying, Frank, what does this have to do with me? I don't trade with $50,000. I don't trade with $1 million. The difference is that if you're in a stock, right, and you don't have this confidence, and you're second guessing yourself, and you're saying, oh my god, you're not comfortable, you're not confident. The likelihood of you being successful is very low. That's why they always say that you should never trade with money that you're not willing to lose. Because if you're trading with money that you're not willing to lose, it's impossible for your psychology to be strong. If you need that money and you're losing that money, it's impossible for you to have a strong mentality. It's impossible. Unless you're a psychopath and you convince yourself that when you're losing money, you're actually gaining money. It's impossible. So, within these questions is literally where it's the difference between making 40% on the stock, 60% on the stock, 100% on the stock. But if you make 40% on the stock, that's fine. If you make 10% on the stock, that's fine. If you make 1% on the stock, that's fine. If you make 0.00001% on the stock, that is fine. Okay? the most important thing is to just be profitable. If that's your main goal, is to just be profitable, you will be successful in the long run, I promise you. And that's the biggest problem for me, is that I try to make so much money that I lose focus about just focus on being profitable. Don't focus on making $5,000 in a day, $10,000 a day. Just focus on making trades that are going to give you the highest possibility of being profitable. So that's what I try to do. Now, very basic, right? Buy low, sell high. Buy low, sell high. This is another thing I want to get into. Within this entire formation, there are millions, if not billions, of types of trades you can do, right? I can long here, sell here. I could short there. I could stop out here. I could long here. I could sell here. I could long here, stop out here. There's so many different. I can short here. I can cover here, stop out there. So many different types of trades. I could buy at $4. I could sell at $6. I could buy at $6. I could sell at $8. I could short at $8. I could sell. I could cover at $7.50. I could buy at $8 and sell at $10. There's so many different trades. To sit there and to say, I'm going to pick the best trade possible, is so foolish of you. Never in your life will you buy a stock here, sell the stock here, buy the stock here, sell the stock here, buy the stock here, sell the stock here. Never in your life, I promise you. If you do, please contact me and I will wire you money. Please. Because I want that. If you can do that, that's what I want to do. That's phenomenal. If you can do what I want to do, then you do it for the both of us. So this is what I'm getting at. You can take any of these trades. You can short here, cover here, long here, sell here. As long as you're profitable, it does not matter. What matters is this. If you long here, right? If you long here, and you cover here, you sell here, right? And let's say you went from $3 to $5, you made $2 per share. And then you say, you know what? I'm going to short here. It's fine. If you shorted there, I wouldn't call you crazy, okay? I would just tell you this. If you short right here, you know what you need? You know what you need if you short right here on this breakout? A tight fucking stop, right? Because if you don't stop out here, if you break out and you don't stop out at 6, guess what's going to happen? You're down 50 cents here. This next extension, now you're down $2.50. You were up $2 in a long. Now you're down $2.50 in a short. This is why I always say, if you haven't read my testimony in the trading chat, please read my testimony. I don't talk about indicators. I don't talk about volume. I don't talk about price. I don't talk about any of that shit. You know what I talk about? Your ability to change your mind. Right? Frank, what does that mean? If you buy here, okay, and you sell here, and you think that this is a short, and you short here, right? If you don't cover right here, in other words, if you don't change your mind, right? You think that this is a short, right? It moves up, and you still think that this is a short. You're now getting squeezed. But if you say, Frank, I thought that this was a short right here, then I got squeezed a little bit. Now I'm down 50 cents. You know what I'm going to do? I'm going to cover my short here. I'm going to take a 50-cent loss, and now I'm going to go long. Do you see how successful you would be? You make $2 here. You lose 50 cents here. That's fine. Not every trade that you make is going to be profitable. But if you're only losing 50 cents and you make $2 here, in my book, you're the best. Your risk-reward ratio, you're risking 50 cents and you're securing $2 in profit. You're the homie. I give you a pound. That's awesome. That's what you want. And if you go long here, right, you can make another $2. If you go long here and make another 50 cents, that's great too, right? Because then you cover this, and now you're still up $2. You need to acknowledge this, right? You need to keep total of this and keep track. So that's what I'm saying. If you long here at $3, right, and your stop, let's say, was $2, right? Just for the sake of the example, if you long here at $3 and you said, Frank, my stop is $2, you know what your target needs to be? If you're at $3 and your stop is 50% of your position, you need to make 200%. So if you told me that you're going to enter there at $3, right? And now you can see how your stop is below support, is around $2 there. You need to be able to make 200%. Don't get me wrong. In this example, that would have worked. Very unlikely that this happens. It's a Hail Mary. If you had a dollar stop loss here, and this doesn't move up $4, $5, $6, you, in my book, are foolish as heck. Because why would you risk $1 to make 50 cents, or to make 75 cents, or to make 60 cents, right? Foolish. That's why you need to have a strategy that tells you, I'm going to enter here, I'm going to enter here. If it breaks below here, I must stop out. If you don't stop out, then you're not executing the trade that you've designed or that you believe in. You're doing something completely different, right? And this is what I see all too often. So I buy it here at $3, right? And that, let's say I sell here at $4, right? So I buy at 3 and I sell at 4, right? Then I grab a short, right, at 4 or at 5, right? I grab a short here at 5, and it moves up on me. It moves up 50 cents. And you know what I do? I add to my position. So that right here, if I add to my losing position, I'm down 50 cents. Guess what I'm doing? This is no longer the trade, right? The trade is no longer short at 5, right? Top out at 6 and target $3, whatever you're targeting, right? Now the trade is, okay, I longed at 5. Now I'm creating it's a completely new trade. If you add to the position, it's no longer the same trade. It's a completely new trade. So now you're double loaded here. Guess what? Your stop now, if you're using the same type of stopping structure, 50 cents, and you double your position, what's your stop now? Should be more like 25 cents. In my book, it should be much less. If you ever add to a losing position, your stop should be super fucking tight. Because why would you have a dog that is sick, right? Why would you have a sick dog and then, throw him in a cold pool and then say, yep, that dog will get better? Why would you do that? Yeah, you're cooling the dog off, but the dog is sick. It's going to get even more sick from being in the pool. So if the dog is sick, try to help the dog. You don't want to try to add to your position, which is essentially going to hurt the dog. Throw him in a cold pool. You want to put him in a warm bath. You want to feed him. You want to help him. So you say, okay, if I double down here, dog, if I give you a nice warm bath here and I take care of you, you got to get better, man. If you don't get better, I gotta put you down. I can't have a sick dog in my house. I can't have a sick dog moping, throwing up all over the place, right? That's not humane. I need you to work out for me. Hold on one sec. New trade. You've invested more. It's a completely new trade. Your stop needs to be different. Your price target needs to be different. Everything has changed. If you keep it as the same trade, you're going to take too much of a loss. It's not the same trade. Your position size is double. So that's what your ability to change your mind. If you just said, oh, stock is ripping, I'm going to cover my short and go long, you'd make tons of money here. You'd have no other option but to make tons and tons of money. Why? Because you were long, you thought that it was a short, and then you said, no, this is not a short, this is still a long. And now you continue to make money, right? It's the difference between going against the trend and sticking with the trend. Sometimes trends reverse, right? That's why everybody's always asking me, oh, do you think this is going to reverse? Stop wasting your time and asking yourself, is this trend going to reverse? Better to be in the trend and then look for a reversal, right? If you just buy, if the stock is ripping, right? If the stock is ripping, I buy at any price. I can buy at any price and I'll be profitable, right? I buy. Why would I then question, oh my God, when should I be selling, right? I don't have that. The only reason why I would think that, or I would want to think that, is if something happened to the stock price or the chart that's showing me that says, yeah, you thought this position was bullish, now it no longer is. If I recognize that and I say, you know what, Frank, stupid, change your mind. You're going to be profitable. Now I'm going with the trend. The trend, if it reverses, great, right? I was right on the ball. If it doesn't reverse, I need to still be able to be profitable. If it reverses and I'm not able to be profitable, I'm only trading one side, and that's foolish. You got to be able to change your mind. So let's look at GBR here. Let's get into some stocks. Everybody with me?
If anyone has any questions at this point before we get into charts, feel free to ask in the chat.
Yeah. If any questions on the ideology, like all of this is so essential. It's so essential. You can't go anywhere without this stuff, without thinking like a trader.
Great info. Thank you.
We got one question, Frank. But otherwise, you're killing it, and you can go ahead after.
Say that again, Ziggy?
You have one question in the chat. Do you leverage bottom and top candle wicks to confirm that the price action is still bullish at the first level of consolidation?
Do you leverage bottom top candlestick wicks to confirm that the price?
I think he means, are you using wicks to give an idea of whether you want to scale in or out at when you approach consolidation?
Absolutely. Always. 100%. Always.
Just to add on to that, what about top and bottom wicks? What are your thoughts on that for him?
Always, guys. The chart doesn't show you anything that's worthless. I promise you. Always. Anything that the chart is showing you, all of those candles have value. The amount of value that they hold is up to the trader. The price has its own interpretation, right? But the value that you think that it holds is entirely up to you. So when I see, when we get into the examples, I'll give some examples of this. But yes, most certainly I do. Let's get into an example here. So here's a daily chart on GBR, right? The big thing to notice here, this is a huge thing to notice, right? See this huge bottom on GBR where we're oversold? When I see something like this bottom oversold, I'm thinking long, right? That's what everybody is thinking. When you're down here, all the way down, nobody was here, right? And they're saying, oh, this is a great short, right? Unless they get confirmation that it in fact is. And this is why I always say that you should always be keeping track of what you're doing. Let's see if I can zoom in here. Always keep track of what the stock is doing and how it's affecting the way that you think. So like here, right, when we have this consolidation, right, if you see this type of consolidation, what do you want your RSI to do? This type of consolidation right here. Man, I really need to learn how to zoom in on this. Hold on. Oh, that didn't work. Hold on, guys. Technical difficulty. I rarely use Fidelity's charts, so that's why this. Is it not showing me this price? Alright, hold on.
Just use like TradingView. Frank, can you hear me?
Yeah. Okay. Hold on. Oh. Okay. And another thing, guys. So, our job, we spend a lot of time trying to figure out what's going on, right? Try to figure out what's going to happen next. The more that you have, in other words, like you're going to see here in a second. So like with statistics, right? The more information that you have, the lower the amount of uncertainty, right? So it's kind of the same thing with stocks. The more that information that you're able to interpret accurately, the higher the lower the level of your uncertainty, right? So in other words, if I have, like, for instance, I use these. Because you're always trying to mitigate your uncertainty, right? Because uncertainty in trading stocks is essentially a loss, right? Because if you're unsure, you're going to be on the wrong direction. So this is what I'm trying to show you. Hold on, bear with me here. Okay. We're making moves. So you see this right here? Look at our RSI. First of all, when you're looking at a specific indicator, you don't go off of anything else. You can't look at the RSI, for instance, and then say, how is my RSI doing? Let me look at the MACD. Or I can't say, how's my MACD doing? Look at my stochastic. Can't do that, right? If I'm questioning an indicator, I need to figure out what this indicator is doing and how it's acting, right? That's how I'm going to interpret price. So here, the RSI, right? See this approaching oversold. So below this orange line is considered the oversold, right? So anything that's oversold is considered to be what? A good buy, right? If you're oversold. Oversold means that the mean price, what the price of the stock should be worth or should be valued at, you're now beneath that. That's what oversold means, right? But if you're using something like an RSI, first of all, go onto Google and type in RSI and figure out what RSI means, right? So an RSI is a relative strength index, right? So relative meaning comparative, right? Relative is saying, comparative to one thing or another. That's, determines the relevancy. If I have $5 and my friend here has $50, and then you come in and you say, here, Frank, here's $10. And they say, here, Frank's friend, here's $10. I have $5, you give me $10. That $10 is twice as relevant to my $5, whereas it's only 1/5 as relevant to my friend's $50, right? That's what relevant. That's how you relative. That's how you determine value, right? It's by comparative data, using comparative data to draw a relative proportion, right? So the relative strength index. So relative meaning in comparison to one another, right? To draw a conclusion based on one another. Strength meaning strength. How strong something is, right? And then an index, which is just saying it's an indicator, right? So, comparative, how strong you are, indication, right? That's what an RSI is. So, that's what it's trying to tell you. So here, if you don't go over, in this example here, we don't go oversold, right? So, if I saw this dip right here, and I'm long on the stock, I want this price to be oversold, right? The sooner that my stock gets oversold, the sooner that I know that the mean price is above what we're currently trading at. Does that kind of make sense? Because I don't know. That's why I always laugh about price, or price entries and exits, because the price that you get is relative. You know what I mean? You can get any price. What determines whether or not where you execute, where the profitability lies, right? But if you're buying, for instance, if I'm buying here, right? I'm buying at this level right here, and my RSI is at, for the sake of the example, 34. Okay, my RSI is at 34. If I go here, where do I want my RSI to be? I'm at a lower price, right? I want my RSI to be lower, right? Look where we are on this RSI. See how this is not lower? See how we're higher? So, what is that telling me? So, think about an RSI, right? Relative, right? Comparative, strength, how strong something is, indication, right? So, if this was this week at this price, if this was this week at this price, now we're at a lower price, and we're not weaker, what is that telling me? That the price is still too high, right? That the mean, or the true value of the price of the stock, is potentially still below. That's what that means. Relative, right? Because it's an indicator trying to show you this. So then your RSI comes over here, right? This new low right here right? See this low? Lower low, okay? So if I'm 34 here, what do I want to be here on this lower low? I want to be 30. I want to be 28. I want to be 24. I want to be 22. I want to be 23. I want to be 21. I want to be lower. It's a lower price, right? This is how people spot divergences, right? Because if it's not lower, that's a divergence, right? If it's higher, it's a divergence between what the price is telling me and now what the indicator is telling me, right? That's what a divergence is. It's a deviation between the two. Now this RSI is lower. That's why you see this. If this RSI was higher, you wouldn't see this. This would not happen. You would get maybe 1 or 2 red candles, and then it would sell off. The fact that this is lower means that there's potentially move or potential for a bullish move, right? Now, I don't want to get too much into it, but because I only have a half hour left. But just using the RSI, that's what this is telling you. So this is a buy opportunity right here. I don't need to look. I don't need to see all this. I don't need that. All I know is that this is a buy opportunity. I don't know that this is a buy opportunity in compared to this, right? It's not. But this is a buy opportunity in compared to this. Does that make sense? That's what I'm trading. I don't know if this is a good price. I could have bought here and it could have plummeted. All I know is that the relative strength of the price at this price is now depicting lower, right? So the price is lower and my strength is lower. That's okay. That's what I'm expecting. That right there, this right here, shows you that this RSI topping formation here, which is essentially a divergence where you're forming a same RSI top, is now broken. The move upward here can move. This is why this formation happens, right? Now this here, you see how it, right here where it ticks up and it goes sideways? Right here, this is your 50% median, right here. This is a 50% median. If you break over right here, right? If the price breaks over right here, right? And my RSI were to do this. So the price is right here, and my RSI were to do this. It were to go like this. And go upwards, right? And my price would go like this, right? Right? Instead, we get this, a decline, right? A decline is okay, right? Stock prices don't just go up, right? They don't go up. They don't only go up. They go down, right? But the amount that they go down is significant, right? If it goes down a little bit here and my RSI, if we go down and my RSI goes up, you know that you're fucked, right? If the price is going down, but the relative strength that you're at a higher RSI, the strength of your price is now weakening at a higher price, or at a higher price, you're fucked. You're so fucked, right? Huge bearish divergence. But in this case, we don't know, right? We're saying this is okay. I expect this, right? This right here, this drop down, look at the depreciation. You see how we have this much depreciation here, and then here it's almost half that? Same amount of decline in the RSI. So this right here, from here to here, is considered, you're looking at this consolidation and you're saying, oh, I don't know if this consolidation is going to break upwards, or I don't know if this consolidation is going to break downwards, right? That's why consolidation sucks, because we don't know what's going to happen. But if you're looking at your RSI, if this consolidation was healthy, the price would be staying the same or around the same price, and the relative strength, my indicator would be adjusting downwards, right? Making the price, the current price, a better buy, right? Make sense? My RSI it was lower here. This is a better buy than it was here, right? Just like here, it was a better buy than here. You think that this is a good buy, but it's not. Sells off. This is a good buy. This is a good sell, right? Doesn't mean that you had to sell here. It just means that this is a good sell. You get this depreciation, you could have sold here. But if you didn't sell here, and you didn't see this high, right? 74.44, and here, right? This and this, right? Essentially the same high, same price, right? Same price. If I get the same price...
Frank, could you zoom in a little bit on that section just to make it a little easier to see?
I wish I could.
Yeah, there you go at the bottom. Perfect, that helps. Zoom in with that bottom section, that helps a lot. Thank you.
Oh yeah, thank you for saying that. So, like I'm trying to show here. So, see this slope RSI, right? See, this is the top right here. We go down, right? We're saying to ourselves, Oh my goodness. I don't know. I'm hoping that this consolidation here is going to break upwards, right? That's what we're hoping. If you're seeing this, you're saying, oh, good, the consolidation is going to break. Right here, I would be a buyer. Because this, look at this. See my RSI? Follow the price. You see the price? My RSI is acting very healthy here, right? See how we adjust down to almost test RSI support? Very healthy adjustment in the RSI here. This is where it gets tricky, right? Because if you're in this trade, you're saying, I think this trade looks good. I think it looks good. My RSI is adjusting down. The retracement was a little nasty, right? A little red candles here. But we find support, and now we're looking to move up, right? So find RSI support here, right? This is my RSI support right here. You can see when we come up, test resistance, come down to confirm, then we break out. So this is acting RSI support. See this? This is acting RSI support right here. We come down, confirm acting RSI support. Guess what the price can do? This is a good long. It doesn't look like it because we can see the rest of the chart. But this right here, if you're just trading, I would be long. This is right here. Frank would say, oh, this is long. The trick is, and it's good. Look at my stochastic. You see this? See how the stochastic dips below the 50 here? This is how I know this is a good move, right? See how my stochastic dips below here? Goes up, dips below, and dips right back up? Good. Strong price action, right? Pushing up, pushing up, pushing up. Good. RSI is good, right? Everything looks good. Good, 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 good. Frank is happy. Frank's a happy camper right here. And look at our MACD. You see this divergence on the MACD? See how this is our volume line, our price, right? This is our signal line. See how our signal line comes down on the MACD here? If your signal line comes down on your MACD, but doesn't cross down, guess what? Bulls taking over. Or if it's the other way, bears are taking over, right? So you got a MACD divergence. Huge buy. Green light. Green light. Green light. Triple green light. I see your question. Let me just finish this. Triple green light, it's a good long, okay? This is where it gets tricky. Because I'm saying to myself, oh, this is a good long. You know, I think this is good. But mind you, I haven't looked at volume, right? I see all this volume coming in. I see the lowest volume off. I think, oh, this is a good long here, right? This is a good long. And I'm in my long. This right here. If I saw this, I would automatically be out of my long. Right here. Look at this. I long here. I think that this is a perfectly good long. This stock is healthy as a motherfucker. Ability to change your mind. If I see this RSI top here, you recognize it? Good, because it's right here. See this high? See this high? Oh, I'm sorry. See this high? Lower high, same RSI. Red flag. Red flag. Okay? Sell my position. I cry for about 20 seconds, and then guess what? Reality sets in. See this? See this high? RSI high? See this RSI high? If you're trading this, you think that this is good, right? That's why I'm saying you always have to look back. Because if you're trading this, this looks good to you. This looks good. But it doesn't look good because of this. This is a relative strength index. You can't just look at this. You have to look at this. Relative. In comparison. In comparative to this. This, compared to this, is bearish. If I was just looking at this, is bullish. But not with this. This is bearish. Make sense? How it's tricky? Relative. You have to know what you're looking at. That's why this fucking indicator, it's not an easy indicator. It's the most commonly used, but that's why people always, they always say, oh, I only buy or I only sell when the RSI is this and this. Because they get so much of this in between where they have no fucking idea what's going on. People literally need to see this in order to say, oh, this is a good buy. They need to. I don't. I see this and see this or a good short. And I know, I don't need this. I don't need this to be oversold. I don't need this to be overbought, rather. I don't need this to be oversold to tell me it's a good short. I don't need this to be overbought to tell me that this is a good long, or oversold to tell me this is a good long. All I need is to draw a comparative conclusion between what the price is showing me now, what the price was showing me then, what the indicators were showing me then, and what the indicators are showing me now. That's it. That's it. This is what I do all day long. All day long. I don't look at news. I don't look at the tape. I don't look at the book. I don't look at anything. I literally don't look at anything. You know what I look at? This, and this, and this. That's it. This, and that. That's it. Because I know if I see this, into this, it's going to produce this. I know that. I've been trading I know that. See this? Bearish divergence? I know that a bearish move is coming. So here, like I said, I exit my long here. If I wasn't licking my lips to short here, guess what I'm licking my lips to do here? Absolutely short the fuck out of it. And if I'm shorting, right? Am I going to short when my stochastic is to the floor? No. Am I going to short when my RSI is completely overbought or oversold? No. I'm going to short when my RSI is above my 50% median, right? And it's looking to change. In other words, this above our 50% median was bullish, right? Now we're coming down, testing RSI support. This is the reason why I love GBR's chart, guys, is because it literally draws the 50% median for you. You see this right here? This is a 50% median, right here. See, right here, when we break upwards, come down, and then look at this. This right here, like I said, I'm licking my lips to short here. If I didn't short there, guess where I'm shorting? Right here. Why, Frank? Because this is my acting RSI support, right? There was resistance. This confirms it as support, right? Now I go up. I come back down to test support. Remember what TJ was talking about yesterday where you used to plot support and resistances? If you're strong, right? If the price is strong, you're going to be testing resistances, right? If the price is weak, what are you going to be testing? Supports. This is like a no-brainer. No fucking brainer, right? So, if I'm coming down to test my RSI support here, is my price getting stronger? No. No. Why would I come down to test an RSI support that I already confirmed? Here. I already confirmed it. This is my support. Confirm support. Now I'm coming down to test support. If I confirm support and then I come down to test it, is that bullish? Fuck no. Right? Hell no. Why would I test support? If this was bullish, I'd go to test resistance. What would I test support for? I would go right here to this green line and I'd go overbought. And the stock would went like this. Right? So, if I didn't short here, I'm licking my lips to short here. Right? Now, and another big thing, like this right here, anytime you see this, why would my stochastic be staying within my 25% mean? Why would it stay within my first quartile here? Why would it do that? You see how when the price is strong, your stochastic moves up, right? Price action, stochastic is strong. If you're coiling, this is essentially a coil action, below your 25% median, the price isn't strong. If the price is strong, do you know what this would be doing? It would be doing this. It would break below this blue line for 2 seconds, and then it would dip right back. It would rip right back up, right? This, if I was licking, I know that this is a short. Like I said, I'm licking my lips here to short it, and now I say, oh my god, I really got to short it. You see this? This is how I know I'm about to get paid. Okay? See this formation right here. And like I said, I use all these together. But this formation, RSI, right? Dip down below. See what we do to RSI support? Anybody? Somebody chime in. What do we do to RSI support right here? What is this right here? What are we doing to RSI support? Right here. Somebody. Anybody. Somebody. What's happening right here?
Testing a higher point.
No. What am I doing? What's my RSI? What am I doing to my RSI? We're on RSI support. Okay? We dip below.
It looks like it's going to take off.
Okay. Not really. We're on RSI support, right? RSI adjusts up.
Still lower than the previous high.
We dip below. Look, see this right here? This right here confirms my RSI support as resistance. That's why if I'm not short here, I'm 1,000% short here. Make sense? My RSI support is here. I dip below, and I come up, and I confirm. Exactly, 50% median. I confirm now my 50% median as resistance. If we confirm 50% median as resistance, where are we going? Where are we going? If I go to my 50% and there's resistance, where am I going?
Down.
Going down. Where?
To oversold.
To my 20, well, not necessarily oversold, but to my 25% quartile, right? To my next block down, right?
Okay. I understand what you mean by quartiles now, if you're using RSI.
This is quartile 1. See, look at this. This is a quartile 1, right? This is somebody just asked me too. This is quartile 1. From here, from this white line, essentially 0, to 30 is quartile 1. From 30 to 40, from 30, wait, hold on. From 30 to, I don't even know. See, I don't even know. From 30 to like 45, I guess, I don't know. Or 30 to 50 is quartile 2. Over 50 to 75 is quartile, or to 70 is quartile 3. Above 70 is the upper quartile.
Right.
That's all quartile. It just cuts it into equal pieces so that I can measure it. It's nothing fancy.
There are cases, though, where I've seen where RSI, I mean, it doesn't matter what RSI is doing or any indicators. If big buyers step in or something crazy happens,
Sure!
like,
Dude, volume, before anything, before looking at the indicator, thing always is volume and price action. These indicators don't give a fuck what happens. They don't give a fuck what happens. If this price explodes here, the indicators will explode with it, right? If they're acting healthily. They don't care. The indicators just indicate what's happening. That's why, like, you'll see, I'll show an example later on, but I don't really have much time, but it's literally, it's tricky, but it's simple. It's simple to understand, but it's tricky, right? Volume is there's something hidden here. We'll get into it, but there's something hidden in here that is helping or not helping my indicators, right? If there's volume, chances are your indicators are going to be less accurate. Reason being, volume supersedes price, right? If you get a bunch of volume, chances are, if that volume is negative, the price is going to move in that direction. If the volume is positive, the price will move in the positive direction, right? Indicators they're relying on that volume to create or to not create either appreciation or depreciation in the price, right? Indicators aren't necessarily measuring volume, they're measuring the price, okay? I mean, unless you're looking at VWAP, that measures volume, but they're not necessarily measuring volume, they're measuring price. They do measure the volume in the sense that, like I said, it's relative. They're measuring volume in terms of relativity, but not in terms of like, 50 people bought here or 60 people bought there. Like, the indicator doesn't do that. The indicator just does what the price is telling it to do, essentially, right? What it's telling it to indicate. So here, and like I said, look at the amount of time that we spend above our top quartile here. See how much time we spent? See here? How much time we spent in our top quartile? See, this is bullish, right? Bullish. See the price? Bullish. Bullish, 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 bullish. See this? Bearish, right? Bearish. See the price? Bearish, right? See this? Bullish, right? Bullish. Bullish. Dip down. See how quick this dip is? This is why retracements are so important. I see a dip like this, and a stochastic that does this, I'm totally long. Totally. This stochastic didn't even go beneath my 50% quartile. This price is not weakening. Here, the price is not weakening. Don't get me wrong, the price appreciates, but here, the price is not weakening. The price is strengthening. The price gets beaten down because of this divergence that takes place, where the RSI is higher at a lower high, right? You have to think about people who are taking the trade. Not necessarily only people, but algorithms. An algorithm sees this, and this, and it doesn't have to think. me and you have to think. I have to say, okay, higher, low, higher, low, higher, high. The algorithm doesn't. The algorithm gets this information, it gets this information, it gets this information, and then instantaneously computes it and spits out the answer, bearish. We don't do that. We're looking at indicators to give us a little bit of extra time and a little bit of, hold on. A little bit of, an indication, right, of what's actually happening. So I like the stochastic. I really do. I find it to be very well. Because especially with something like this. This type of coiling, lower percentile coiling, I know that this 9 times out of 10 produces a bearish move. Because the price is trying to appreciate rejection. The price is trying to appreciate rejection. The price is trying to appreciate rejection. If it does that 5 or 6 times, guess what? We're maintaining price. This right here, yep, right here to right here, is unhealthy consolidation. Right? This was healthy consolidation. Right? Unhealthy consolidation. See our MACD? Look at our MACD. See how we dip below our signal line here? See how our signal line is riding the price? Right? Still bullish here. Even though we adjust down, still bullish. Still above. This right here is where it gets definitively bearish. That's why I'm saying if you didn't get the short here, you no doubt have to get the short here. Because this, there's no question about this is bearish. That's why you get this. This is a no question bearish. That's why you get a bunch of bearish volume. Because I see this, the computer sees this, Robert sees this, Jeff sees this, Marcus sees this, Anthony sees this, and they all sell, or they all short, right? Everybody sees it. Now let's just fast forward a little bit, because I don't want to spend too much time on getting stuck. So this new consolidation here, right? New consolidation. Look at this. See this bottom on the RSI? See how we formed a new bottom on the RSI here? See this? See this? See this? See this? See this? See this?
Mm-hmm.
Yeah, lower RSI on a higher low.
Right. This, the reason why this turned into this immediately because of this. Finding support, buyers, right? Buyers, see this? Buyers, see that? Buyers, see my signal line? See my price? Buyers, see my signal line? Buyers, right? Buyers, right? See this? Green candle, buyers. Too bad that the buyers dry up. See this? If this were to do this, like this, buyers are still in control. See this right here? Buyers need to step up here. They do. And they lose control. See that? Buyers step up, lose control. See how it went to break into my 75% median? Now my 75% median, look here. See this? See how my stochastic, this 75% median is support? See that? Price is still okay here. Still strong. It's not strong when it breaks below the 75 median and now does this. Confirms my 75% median. So we shouldn't have seen sellers here. We should have seen sellers here. Instead, we see them here. Bearish. This is a hidden bearish. Hidden. You wouldn't see this. Nobody would see this. I mean, I would, because I watch this like a hawk, but nobody would see this. Everybody would still be long here. Less than 1% would see this. Still be long. If you went here, this is where it gets tricky. Very, very tricky here. Okay? See this bottom? See our RSI bottom? See this here? Right? Higher, right? Higher low, right? Higher low on our RSI. This is good. Okay? See how the green volume comes in? This, because technically, given the indicators, is good. This is good right here, right? Now, doesn't mean that we're indefinitely bullish on GBR. It means that this right here created this little bullish move here, right? Then it's business as usual, right? Here, look at here. See our RSI top? Look at here. See this RSI top right here? Look at this RSI top right here. See this? See this? See this? See that? See this? See that? Okay? High, low, You could say it looks higher. It might be the same, but it looks higher, right? But regardless, it should be lower, right? This bearish, and look at what the stochastic. See, hidden. That's why it's a little bit tricky because now I have one indicator telling me bearish, one indicator telling me bullish. That's why the more all on the same page, the more decisive of a move. See my stochastic dips down, dips below, find support. This right here is where it gets tricky. Because see this right here? See this top on the RSI right here? Right here? And right here. This is where it gets very, very tricky. Okay? Because anybody who's trading this is saying, fuck, I have no idea what's going to happen. Because you don't know what's going to happen until this. See this? Confirm. Or, I'm sorry, it doesn't confirm. Comes down below, right? See our RSI here? RSI here, essentially the same RSI, right? Same RSI, right? Stochastic's good. Signal line is good, still over on the stochastic, right? This is where we get a sell signal here because of our MACD. Let's see if I can zoom. Hold on. See right here? Buyers are in control. See this? Buyers are in control here. Buyers are in control. 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 Right here. See this? Sellers. If I was long here, I'd sell right here. Sellers. Topped out stochastic. This is where you sell, right here. See? Sell. Right here. You don't want to sell here. Why would you sell here? Right? You wouldn't sell here either. Right? You'd sell here. If you think that this is going to go more bearish, you sell here. Right? Or here. Never sell at the bottom. Always sell at what's showing you to be the new top. Your tops will change, right? If, for instance, see here, bottom, see here, I'm just using my stochastic here, right? See how my indicator tops out, right here, from whatever, 650 to whatever, 680, right? See how my indicator tops out, okay? Look at here, okay? 650, similar price, 650, indicator tops out. That's why I measure these. Is my indicator topping out sooner or later? If it's topping out later, buyers are still will maintain control, right? Buyers are still showing up to the party. If this is topping out at a later time, buyers are still showing up to the party. If it tops out sooner, guess what? Buyers showed up to the party, they topped out, and guess what? Now they're leaving the party. So if you didn't exit here, it's very hard to see this. This is very tricky. Very, very tricky. Even me, I get caught in this sometimes. Because it's very tricky. Who the fuck knows? But like I said, once I see this, see how it completely disregards my 50% median here? This completely resets. This, right now, I'm thinking, oh my god, that's so bad. So bad. And now let's go back to my RSI. The MACD doesn't really help because it's super tight. But see my RSI? RSI, right? I need to form a lower RSI. If this RSI came down to my oversold line here, right? See here? Right here? If this RSI came down to my line, that would be much better. I'd be happier. Because my price is becoming, it's a better buy now. This isn't as good as a buy as this. This is a good buy. This is not maybe not the not the worst buy, but it's not a good buy. It's not this buy. That's what I'm saying. Like these entries and exits, there's a good buy, there's a great buy, there's an excellent buy, there's a semi-good buy, there's a mediocre buy, there's a mediocre good sell. There's so many different possibilities. But all you need to focus on is buying the bottom and selling the top. This is what I do. Buy the bottom, sell the top. I buy this bottom, I sell this top. I buy this bottom, I sell this top. See that? It's that simple. It's all I do all day long. That's what I try to do, right? So when does this get super bearish? It gets super bearish right here, okay? See this? Bottom, right? Bottom, okay? See how we're breaking below. So this right here tells me what? See here? The price doesn't just make sense out of your head. No oversold. Make sense? No oversold. This right here. No oversold. Okay? No oversell. No. No. Rejection. Divergence. No. No. See this? Oversold? Yes. Yes. Oversell. See that? This is where you need. If you're not writing anything down, write this shit down. This huge sell indicator. See this? Oversold, yes. Okay? Oversold, yes. That's what the indicator is telling me. You want to oversell me? Do it. Yes. Price going down? Yes. Oversell. Oversold me. In order for the price to be oversold, what does it have to do? It has to have gone down. Right? That's where people get confused. They think oversold is a bad thing. You know what I mean? Like, it is a bad thing. It's hurt the price of the stock. But oversold stocks, if you're buying, is what you want to buy. So that when you go back to the mean, you're going to make money, right? Because if you buy here, I mean, granted, you could try to buy here. I wouldn't, because, like I said, you entered. If this right here, if we would have held above my median, I would have bought here, for sure. For sure, I would have bought here. And then I would have waited for this. See right here? Oversold, oversell, oversell. C, yes. C, allowed. Oversell me, allowed, yes. C. This right here, confirmation, right? Look at the price. See the price? See the price here? $6. Okay? See the price here? $5.50. $5.50. I'm 50 cents lower, and I have a higher RSI. What is that telling me? What is that telling me? Bearish. If I was 50 cents lower, how the fuck would my RSI be higher? If I'm 50 cents lower, how does that make sense to you? It doesn't. That's why it's bearish, right? This is a huge sell indicator. If I wasn't short, I would definitely be short. Yeah, believe me. Miss one opportunity here, miss two opportunities there, miss three opportunities right here, oversell yes. I'm not missing this opportunity right here. This is as clear as day to me. You see how we don't even go up to the 50%? See RSI support here? RSI support, RSI support. We didn't even make it to RSI support. This diverged below our. This is weaker than weak sauce, right? If this was strong, we would have went up to RSI support, broken over, and the price would have done that. And what? Right? Weak sauce, right here. Weak sauce, lower price, higher RSI. Here's the sell-off, right? See how we break below? Oversell, yes. Okay, now this is right here. This is the real move. This new bottom, look at it. Scroll back here. You see this RSI bottom? No. You see this RSI bottom? No. So you broke below 25% median. Confirm my 25% median now as resistance. From right here, if I wasn't short here, I'm shorting right here. Even though I'm oversold. Don't get me wrong. You could still buy here. Like I said, oversold is a good buy, right? If you could still buy here, good. If you sell here, right? If you're able to sell here or here, you're okay, right? But if you buy here thinking that this is oversold, and then this happened, look at this. You see this? Is the price oversold anymore? Here, is the price oversold? No. Now we're on the line. We're on the 25% median. We're not oversold. We're not below the 25% median. How are we at a lower price here and we're not oversold? Bearish, once again, right? Bearish. The only reason why this right here, this little formation, I mean, you could call this a bull trap, but you wouldn't know that, right? The only reason why this little move played out here is because of these two RSIs right here. See this? Bottom? This new bottom, a lower RSI. So people are coming in here, they're thinking this, that was the bottom right here. They're thinking that this right here is a bottoming formation, just like I did. I thought that this was a bottoming formation, right? I know it's not a bottoming formation when it does what? When here, I go oversold, right? This is a good buy. Look at this. Good buy. Buy, buy, buy. Buyers in control, right? Buyers in control. Look at this. Buyers lose control, and then look at this. It's not, you know, I'm repeating myself. It's the same thing that we saw over here, over here, over here, over here, over here. It's the same fucking thing. It's the same thing. Buyers in control, buyers lose control, buyers look to regain control, bears take control. Right? It's literally the same exact fucking thing over and over and over and over again. Right? This is where it gets interesting. RSI, extremely oversold RSI here, right? Extremely oversold. Like 20. Okay? Oversold. Goodbye. Okay? Goodbye. We adjust up. Now, this adjustment up, look where we are. This is RSI support, right? RSI support right here. This price, $7. RSI support here, $5.50. You see how the price... Oh, hold on. I fucked everything. Oh my god, I haven't even gotten into the chart yet. Oh my goodness, this is taking forever. Okay. Oversold, right? Oversold, see this? See this right here? Oversold. 25% median, right? Break over, okay? Bull trap, right? Because they sell it off. Rejection here. See this? Rejection. See this? This is bullish. See this? See how quickly my stochastic adjusts down here? This is bullish as fuck. I'd buy right here. If I saw this right here, I'd buy. Right here. This, I'd buy. See that? I buy it. Now, whether or not I stop out here, I probably wouldn't stop out there because I'm not that good. But once I see this, guess what? I know that this shitty trade that I just took right here, I need to stop out right here. If I don't stop out right here, guess what I'm doing? This. That's why you have to stick to the trading strategy. Why would I long here and not stop out here? You're a fool. You're an absolute fool. It's showing you right here. Bulls in control. Bulls lose control. If you're holding a long position and bulls lose control, what the fuck are you doing?
So, I mean, you're not setting a stop for that. You're just thinking you would just sell it manually, right?
Oh yeah, I never said hard stops. You're saying if I longed here, where would my stop be, right? Is that what you're saying?
No, I'm just saying, based on how you explained it, like, obviously, you're just, yeah, I don't know. I guess just the way you explained it, it made it sound like you weren't setting a hard stop. Or you were setting a hard stop.
No, I don't know where my stop is. I don't know, like I said, I don't know if this
right,
trade
you're
is
basing where you're going to stop out based on what that stock tells you. Those buyers just were in control. They lost control. It tried to regain control and failed, so obviously you're going to stop out there manually. Makes sense.
Yes, absolutely. My stop would have been here. See this red wick on the candle? This is my stop right here. Because you can see when we break below the support line here, that's when we break down. This is where my stop would have been right here. My physical hard stop. But like TJ says, if you're in a trade, right? If I'm in a trade, if I long here, and I see this, which is a bearish, I know that this is a bearish indicator right here, because I study the stochastic, why the fuck wouldn't I just stop out? Why would I wait till right here, take another 20 or 30 cent loss, and then just, I guess, whatever? Why would I do that? Fuck that. Just take a stop right there. Goodbye. Bearish. Bulls in control. Bulls no longer in control. I'm holding a bullish trade. Goodbye. Simple as that. Now, this right here, right? Now we're saying, oh, Frank, when does it become a goodbye? Look at this. Oversold, right? Oversold, right? See how we're not oversold here? Right? Tricky. Now my RSI is lying to me, right? Now my RSI, if my RSI was being accurate, if it was depicting price, this is negative 20, this is 20, this should be 10.
Yeah, that's called hidden divergence.
Exactly. But it's only hidden if you're not paying attention. It's not hidden to me. I see it clear as day. See? Look here. See this? See right here? See this right here? Boop, 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 boop. See my 25% median? See this line? This line tells you whether or not your stock is oversold. Now my stock is saying, oversold? No. No. The stock doesn't want to be oversold here. Make sense? See this? Bearish. Bearish. Okay? If you're bearish, you create a downwards move. If you go downwards, but the stock doesn't want to go, it's not oversold, like I said, hidden bearish divergence, right? Because if RSI is acting appropriately, this is a sell signal, right? That's why it's hidden bearish divergence. Look at this. Why the fuck, if you're trading this, right? Let's say you bought here, right? You bought here. Why would you sell right here? See the trap? See how we bottomed here? See that? See this? Bottom. See my MACD? Divergence. See? Signal line? This is my signal line right here. This dotted line is my price. See how the signal line goes on top of my price? And says, so if this was bearish, right? My signal line would have came here and crossed downwards. And the price would have been greater than what we're trading, right? My signal line would have been down. The price would have declined. Instead, my price meets my signal line meets my price and says bottom. Oversold? No. No. It's oversold. Yes, it's below the oversold, but it doesn't want to be oversold. It wants to move up, right? If it was continuously to move down, then it would just be lower, right? It would continue to be oversold. That's why it's so tricky. So tricky, right? And then here, where's my exit here? It's the same thing. I'm literally saying the same thing over and over. Where's my exit on this top, Silver? Where's my exit here? If I know this is a good long here. It doesn't want to go oversold. If it doesn't want to go oversold, guess what it's got to do? If my stochastic is bottom, go up, right?
Yeah, I would sell as soon as we're overbought, personally.
Yeah, I mean, that's
what I always do. I miss out on things sometimes, but I always secure profit.
The reason why you miss out, and I'm like, this happens to me all the time. So, if you look at this, right? So you'd say you sell at this first top, which is a perfect exit, right?
Yeah, good. But sometimes, in this case, it's good, but sometimes that's bad. Like, you would lose profit there easily.
That's why, because on the 5 minute, look, I'll show you. But look, see here. So I don't know to sell here. I'm not like always just sell when it's overbought because I want to catch if there's going to be more of a move, I want to see it, right? But here, do you understand why I sell here?
Yeah, you see that the buyers fell out and then they tried to regain control. They failed, so obviously you'd want to sell right there as soon as that started to fall after that, hitting the...
It's a no-brainer. That's what I'm saying. I'm never confused. This is a no-brainer.
Yeah, so you'd still be in good profit, but if they did regain control, then now you can just secure more profit and keep going.
Exactly.
Versus... yeah, so either way, you're profitable.
And what am I watching? Right here, the retracement, right? If I'm watching this retracement, I see this hideous red candle, I'm saying, oh shit, don't go below that. And then I get this green candle, I'm saying, thank God, right? But it's kind of a trap. This green candle is essentially a trap. Reason being, see this wick? We hit resistance. This wick, right? The RSI would look much in a different world if this wasn't resistance here. The RSI would have came down and exploded and formed a higher high here. It doesn't. Bulls are in control here. We break down. That's fine, right? After a huge extension, it's not unlikely that bears will take control. What's the difference between bears being successful and being unsuccessful is if the bulls can regain control. This shows me that the bulls cannot regain control, right? If it was staying over, then the bulls would maintain control. We'd remain overbought.
But it also shows that bears did not fully regain control. It kind of consolidates there on the halfway point.
I'm just saying, yes. I don't know that yet, though.
Oh, sorry.
I'm just saying if I would be exiting here.
Oh, absolutely. Yeah.
I have to. Because if we're not going to go overbought, in other words, if we're not going to remain bullish, what's the only other option? To turn bearish. It's the only other option. That's what I'm saying. When you're in a trade, you have to constantly be considering the other side of the fence. Because if you were, you would know. You would know what I know here. Even if you didn't see the RSI, you would still know this, right?
Yeah, and the retracement there too. Also, like we just had this huge leg up and it retraced. That's a pretty healthy retracement. Like it just came back. It's
Yeah. It's not. This retracement right here is not bad. This retracement is not bad. What's bad is this. This is what's bad, right?
Yeah.
And see the stochastic how it does the same thing? And this is like green, red light, red light. My MACD. The big thing that to do, MACD is a very tricky indicator. It takes, even to this day, I still don't fully understand it. But what I have been realizing is that the greater amount of space, See how the amount of space between my MACD and my signal line is great? This amount of space between my MACD equates to elasticity. Huge amount of space here, price is very elastic. Bounce, 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 right? Small amount of space, see like right here? See how the price is very inelastic?
Yeah, makes sense.
Yep. And see, right here...
Because the reason that widens is because you just had a huge spike in price that caused the signal to separate from the... whatever the other one is.
Exactly. Increase elasticity, right?
So that would make sense for there to be volatility then.
So let's say I was drunk and high this day, and I didn't see the RSI, and I didn't see the stochastic. All I have is my MACD and price. Look at my MACD here. Anytime that you see this in the MACD, see the MACD, how it's sloping upwards? Right here. See how it goes from sloping upwards? I call this tapering. When you hear me say tapering, that's what this is right here. It's a 1/4 inch big. See this? This right here is a taper. If the MACD moves sideways, right? Bulls aren't in control and bears aren't in control. That's what that means. So if the bulls were in control and now nobody is in control, is it easier for the bulls to regain control or for the bears to take control?
Well, the bulls were just in control, so I would say the bulls.
Right. If it was easier for the bulls to take control, guess what? We wouldn't be here. The bulls would still be in control. The reason why this is tapering is because bears are looking to take control of the price. Red light here on my RSI, red light here on my MACD, red light here on my stochastic. See this? Trifecta. Beautiful short right here. Beautiful short. If I exited my long, I'd short it right here. Bink. Hopefully I cover right here. Right? So look at this. This is where it gets a little interesting, right? So here's now, like I said, always go back. Always go back. See this is still my RSI support. My RSI support hasn't changed. Has it been turned into a resistance? Sure. Right? And then now, see this? Move up, move up, move up.
Old resistance is now support as well.
Right. It's the same thing. Just as it was with price, right? Just as when you go over a price and you come back down, old resistance, new support. It's the same thing with my RSI. The difference is see how my RSI is at my median here. See how my RSI is at my median here. Look at the decrease in price, right? So if you're confused, just think about it very simplistically. Higher price, I'm at 50 RSI. Lower price, I'm still at 50 RSI. Is this stock bullish? Fuck no.
I was going to say, no,
If the stock was bullish, this would be 50 RSI, this would be 30 RSI, this would be 0 RSI. Make sense? If the stock was bullish. It's not. So let's move on. This right here, huge bar extension, see this?
Yeah, also the retracement on that is past or below 50%, so that's bad too.
Yeah, this is an unhealthy, absolutely. This, you see this type of retracement, fuck out. This, you move up like, well, first of all, anytime you see a red candle and this type of appreciation is sketchy. Why would you be blasting up and catch sellers halfway?
Yeah, I probably would have sold right there.
Yeah.
I'd have been like, what's going on if I would have bought way down in that bottom dip.
Yeah. No, definitely. But really the reality of the situation is that because we gapped up here, people are taking profits, right? So this retracement obviously is clearly unhealthy.
Oh, that was the start of a day. Okay.
Yeah. Well, this is 1 a.m. This is 1 p.m. now. This retracement clearly unhealthy. But see this right here? See this? I wish I could draw lines. Hold on. Not what I wanted. See this? See how this is our previous consolidation here, right? Gap up. See how the real move doesn't occur until we get above this line here? Once we get above this line, right? Break over previous consolidation. That's why this stock here is very bullish, right? Break over previous consolidation, rip up, right? This formation...
You're escaping everybody wanting out of the previous drop back there in the previous day.
Exactly. Exactly. Look at how much sellers you have here. See this? See these sellers? See these sellers right here? See the same price. Same amount of sellers. Even more sellers here. Green volume comes in. Still resistance? You telling me that these people... I'm not... You know, like... You're telling me that people sold off here. Sold off here. Sold off here. Sold off here. You're telling me that these people still didn't fucking sell? No. These people sold. Guess who didn't sell? These people. These people. The people who bought. The people who are, yeah, like Skyper, who hold these fucking things too long. Like, literally.
I always think about when is the earnings going to be, and it'll come back up.
Fuck the earnings! Who the fuck? Are you kidding me, Skyper? I'm going to blow up on you.
Okay.
Who the cares about earnings, for God's sakes?
It'll
Are
come
you
back.
kidding me? No! No, it will never come back, Skyper. This stock is a piece of shit. You cannot say that this will come back. It could very much well never come back. It could be TVIX at $2,000, for all we know. Don't tell yourself that. Trade it. We have no fucking idea. Don't tell yourself it's going to come back. You have no idea. Get out. You see this retracement? Get out. You see this break on support line? Get out. You see this? See this? Confirm support? You didn't. If you do this, anytime you knife down, I've said this many times. See, we knife down here. See how there's a beautiful gap here? If you knife down like this and don't enter your gap, guess what this is right here? Super fucking bullish. Super bullish. I don't even need to look at my indicators. Just based off of this. Here's my gap. See this? See right here? This is my gap. See here? If I don't enter my gap here on a knife down, guess what? Being not as bearish as you should be is bullish. So right here, I'm immediately saying, oh my God. Well, first of all, I'm saying, I always, in this type of situation, if I was feeling extra risky, I would try to get along here. I would try to get along as close to this bottom of this candle as I could, knowing that if we don't gap back down, right, if we don't gap down here, I can stop out just below this acting support between these two candles. This is a good, could be a good long. It's a good long, right? And then I'm looking at my indicator, I'm saying, RSI. You see how the RSI doesn't want to go oversold here? See? Bullish. Boop. Move back up. Problem is, look at this. See this right here? Can anybody tell me why this right here is super bearish? This right here is very bearish. See this? You don't want to go oversold. I mean, yeah, you don't want to go oversold, right? Look at this extension. I always measure extensions. What am I always preaching? Measure the fucking extension. Not only measure the extensions, but measure how the indicators are adjusting. See this? Adjustment on the RSI? See this right here? Bing. Right here. See this? We moved down 20 points. Okay? Move down 20... I don't know if it's 20 points, but I'm saying. If you move down 20 points here on this amount of depreciation, you better move up. If you move up 20 points here, this is a neutral move, right? See this? If you move up 20 points here on your RSI, this is a neutral move. We move up 30 points. So what is that telling you? That's telling you that the mean of the price is lower here. Lower, 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 right? This is bearish right here. I hate this. I see this, I say yuck. And you can clearly see this line, acting support, just becomes what? Resistance. See when we break over resistance here? Look at this red candle. See this? See this red candle right here? It's not a coincidence, guys. I don't make this shit up. This is not none of this is a coincidence. See this line? See how everything is determined of this line? Break over this line, break out. Break below this line, break down. Break, confirm this line as resistance, stay below. Break above this line, break out. See this?
Breakout, yeah.
Back tested breakout. Bingo. And look at my RSI. See my RSI? Right? I don't want to be overbought. Okay. Do I want to be oversold? No. Bounce below, but above my RSI support, so I don't want to be oversold. If I don't want to be overbought and I don't want to be oversold, right? And I'm bullish, guess what? Guess what the move still is? If I'm bullish but I don't want to go bearish, guess what? I'm still bullish. So guess what? Here is a good long. Right here. Long. Long. Good. Good. Beautiful. Right? This is where it gets tricky again. Okay? This, see this? This is another bullish indicator. See my stochastic? Find support on my 50, comes up. If it was weaker, it'd come down, break my 25 median. You see how this all makes sense? You guys see how this is making sense? Because I want everything that I'm doing to make sense. This way I'm never feeling like I'm stupid. I hate feeling stupid.
Trading like this is really hard though unless you have a good broker where you have hotkeys set up where you can do this quickly because things change so fast.
I don't use hotkeys.
Frank, CBS had a question for you.
80% of my thoughts, my executions, I never use hotkeys. I always click. I'm a clicker. I like clicking. All right, let's answer a question. You guys, I mean, you get the idea here. Look, right? That's basically how I read these indicators, right? So look, see here? Indicators adjusting down on virtually no appreciation. Back, look at this. See? Confirm my line of support. We can move up. See here? Overbought too early. Why are we overbought here? We should be overbought here. Now we're overbought here. Overbought at a lower price. Price, weak. Weak. Right? Oversold here. Right? Bull, 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 bull. Right? My line, resistance, here. Okay? Weak.
So how did you draw that resistance and support line again? Did you just draw it off the consolidation you say? Or?
Look right here. Yeah, previous consolidation. See this? And I mean, if you want to really scroll back, look. I need a bigger chart, but yeah, previous consolidation. And I mean, it's more of like an area, right? It's never really a definitive line. It's an area. It's like from here to here, right here, right here. See this? Because you consolidate here, right? See when we break below this price, we crack down here. See when we come up to test, we crack down here. See when we break over this price is when we explode. You know, that's where, and look, see this right here? This isn't a coincidence. Anytime, this is essentially, Tony was asking me about a pinching formation earlier. This is a good example of a pinching formation. Without using the moving average, I'm just saying. You move up, right? You move up, you depreciate very, very little. See how much the RSI is coming down here? Look at this. This is very nice. See? RSI is healthy, 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 healthy. Right? A little bearish here. A little bearish. But since you're not higher, look. It sits on the median, and then boom. Boop, right? A little bit off of the textbook move there, but you can kind of see this coiling action happening between your 25 and your 50. So the stock price doesn't really know where it wants to go here, right? All it knows is that it was extremely bearish here, and like I said, it finds support. If you're extremely bearish and you find support, instead of finding more bearishness, you're bullish. But it's very, very basic. And I mean, you can clearly, it's a no-brainer what's going to happen to the stock. Look at this. This thing's a fucking mess. Look at here. Didn't even oversold here. See this? See here? See how we're oversold like crazy here? We're at the same price here. We're not oversold. Are you fucking kidding me? It's a nightmare. Alright, let's look at some questions.
Alright, I gotta go. Thanks for everything, Frank. Appreciate it.
Yeah, my pleasure, Silver. Thank you for participating. Because, okay, so he's saying my RSI, this is only taking the previous 14, right? But if I take the previous 14, and we move up, and then I take the previous 14, and I take the previous 14, it's coming with me. You know what I'm saying? The amount of space that you're relaying information back is coming with you as you're moving forward. Like, as you're moving space and time. That's why it's relative. That's why it's a relative strength index. Could it be relative if it was one candle? How the fuck would you have a relative... How would you understand relativity if you only have one thing to go off of? Yeah, it's using 14 candles. The relevancy, the relative strength of the past 14 candles. If the relative strength of your past 14 candles are extremely bullish, right, RSI will move up. The relative strength of your previous 14 candles are extremely bearish. Guess what? RSI should move down. It's acting appropriately. What else we got? Oh, wait. I wanted to show one thing. Fuck. Hold on. Please hold. This doesn't really show it good. Maybe a different example. I'll do it later. What other questions we have? Where am I now reading?
I didn't ask it already, but... Oh, sorry, Echo, sorry.
You guys, so what percentage max? A healthy retracement is 25%. If you move up, if your stock is bullish, okay? If you're at $0, okay, and you move up to $100, okay? 0 to 25 is quartile 1. 25 to 50 is quartile 2. 50 to 75 is quartile 3. 75 to 100 is quartile 4. If you move up from $0 to 100, and then you move down to $75, in my mind, that's a healthy retracement. If you move down to $50, that's a questionable formation. If you move down to 25%, or $25 rather, that is a weak formation. If you go up to $0, if you're at $0, you go up to $100, and then you settle off back to $0, guess what? That is a weak and a shit formation, right? Obviously. It's that easy. What else? Yeah, I'm gonna say I should use hotkeys. I don't. Anybody else? Questions? I only got like another 15 minutes here. Oh, Joel, your mic's on.
Frank, I want to hear your risk management tips. Anything you got? Because that's one of my... Hold on, let me mute that person. That's one of my biggest struggles still at this point is not always winners or losers, but it's actually capitalizing on that and capitalizing on the margins, pennies here and there.
All right. So good? Give me a stock.
How about GBR? Just because it's been crazy.
Okay. So let's talk about risk management. Probably too big. Okay, so always, this is part of my trading strategy, obviously, but when I enter a trade, if I'm entering long, right, I'm expecting, I hope, that the price goes up. If I'm entering long, right? So let's say, for instance, I don't know, pick a spot, pick anywhere, pick a time, give me a time.
9:30.
The big thing to understand here is that a trade can happen anywhere, right? You could trade the stock at any given time. You go buy here, buy whenever you want. Here. So just give me a time. Or, yeah, give me a time where you probably buy or sell, whatever.
That dip. Actually, go second one, 11, where you have support.
Over here?
Yep.
Okay, good. So, this right here is a good example, I guess. So, I'm looking at this formation here, right? Extension upwards, right? This is a good example. This is our entire move. From $0, I'm just saying hypothetically. From $0 to $100, right? Right here is $50. See how you find support on $50? Price moves up, right? Resistance, price moves down. So if I'm long here, right? If I'm long here, my support or my stop is going to be the bottom of this green candle, right? Hold on. If I'm buying here, right? I'm buying right here. So 458, I buy, right? So in order for me to buy, the likelihood of the trade being profitable must be greater than 50%, right? I'm not going to enter a trade to gamble, right? I'm not going to just enter a trade just to enter the trade. I'm only going to enter a trade long if it's 51% or more in terms of my perspective and my confidence ability that the stock is bullish. Make sense?
Yeah.
So I always factor this in. For instance,
You want volume.
yeah. Let's just stick to that. We're just sticking to psychology. But of course, you want volume. You always need volume. In order for the stock to move, you need. But like I said, I'm trying to think, right? So the trade that I'm placing. So at 458, I'm thinking to myself, okay, 458, I'm going to long here, okay? If I long at 458, right? Now you want to have a stop that is, for me, okay, so for me personally, I never want to take a loss that's more than 1%, okay? So if I long at 458 with a full position, where does my stop have to be? Well, I told you where my stop would be, but I've just cut to it. My stop would be at the bottom of this green candle, right? So let's just say for the sake of the trade, I buy here at 458, and the stop is the bottom of that green candle. The bottom of that green candle, the bottom of the wick of that green candle is 445. I'm just saying. It's 445, okay? So if I'm trying to buy at 458, and I know that I can't stop out before 445, because I know if we break below 445, that the resistance or the support that we found there is no longer there, and we're going to break lower, right? That's what this, when he's talking about if I leverage on, upper and lower wicks, fuck yeah, I do. If I see a wick like this, after a downtrend, after a gap down like this, you see red candles like that, and you get this candle, this is a pending reversal candle. If you get a pending reversal candle, and then a big green bar like that, guess what? Chances are, you're seeing a fucking reversal, right? So, but back to the trade. So for 458, okay, I'm entering the trade at 458, and I know I don't want to lose more than 1%. Now, mind you, it's a little bit naive for me to be trading something like GBR and think that I'm going to not lose more than 1%. Does that make sense?
Definitely, but when you think of the 1% and the 51%, like when you're saying only take trades at 51%, are you ever considering that most of the downside would be gone? Because I feel like I've screwed myself plenty of time taking the ones that are red and getting wrecked.
Of course. The further down you go, right? The further down you go, the greater the likelihood of me being profitable on a long, right?
Yeah, like on GBR the other day, we were holding. It was probably because of the SEC filing, but then it just totally dumped. So I don't really know what my question really is, but I'm just saying for everyone else, it's like it can always go lower.
Okay. Yeah, well, I mean, that was really some type of... Okay. I can explain this to you, but it's going to take me an hour, and I don't have an hour. But the reason why that happened is because GBR, think of it like GBR sitting in GBR in a room by its, all by its lonesome, right? It's easy to see it. It's right there in front of you. You can touch it, you can feel it, you can touch it. But with all the stuff that's been going on GBR, it's like GBR. It's got news. It's got this amount of buyers. It's got volume. It's got price action. It's got interest. It's got all these things going for it, right? So there's so much in the room that the price makes an extremely drastic move, right? GBR goes from $1.30 to $14, right? And just like SPY, now with all the trade wars and tariffs, elasticity was very great, right? Because of this. Because nobody knows the real value of GBR, it can go anywhere it wants. Elasticity is huge. Huge. You can go $20 in one direction and then $20 in the other direction. So you have to understand the beast. You can't, that's what I'm trying to, that's what I'm about to nail on the head here, is that when you're trading something like GBR, you should automatically assume at every given instance that it can drop or rip $2. Because this stock has nothing holding it. You know the base, the bears, and the base, the bulls, and the bears, right? This stock has no basis. There is no base. The base, if you're going to call it the base, it's at $1.30. So if you're trading at $6, $7, $8, $9, $10, $12, $14, $15, $16 base, the base doesn't exist. If it does exist, it's back down at $2, right? So it's up to the bulls and the bears. If you leave it up to the bulls and the bears, they can do whatever the fuck they want at any given time because there's no base. Or the base is very far away, right? The mean is very far away. If the mean is very far away, elasticity is very high. So, understanding the beast. Something like this can drop $1, it can pop $3. If GBR opens on Monday morning and somebody just says, you know what, I got 100 grand, I'm going to buy 20K shares of GBR, that could trigger a huge buy. Huge. It could rip another $5, $6, $7. Just like that guy who was trying to sell 20K shares on GBR today, crashed the price almost 85 cents by his low, right? Because he can do that. The base is so far away. Elasticity, right? So, if you got screwed on GBR, the reason is because you didn't respect the beast, okay? Now, this is what I'm getting into. So, if I exit, exactly, it's a high-risk trade. So I'm looking at 458. I'm looking at 458 and I'm saying I want a long right here, okay? I know that my stop has to be 445, but I also know that I don't want to take more than a % loss. But I also know that I'm trading GBR and that if this were to move 1%, it would be a fucking miracle. If GBR has a move and it only moves up 3.75 cents, which is 1%, 4.58 cents, that's 1%. If it has a move and it moves less than 5 cents, I would be appalled, right? So I'm foolish if I enter this stock at 458 and I think that I can only secure a 1% loss, right? Because I know that my downside is 445. That's 13 cents. That's almost 3%, right? So I'm looking. I know I want a long GBR. Okay, I know I want the 458, but I know that I don't want to risk 3%, right? So this is where I'd say position sizing and taking control of the trade comes into play, because, like I said, given this specific example and the environment in which GBR is currently operating, I'm going to have bias, right? I'm going to have bias based upon how the chart or how the price action has been acting, right? But I want to alleviate those biases, right? So I think GBR could be bullish here, and I want to buy at 458. At the same time, I don't want to risk more than 1%, and I recognize that my stop is 3% away. So what can I do? Well, I say to myself, okay, Frank, how confident are you that GBR is bullish? -3, -2, 1, 1, 2, or 3. In this example, it's only going to be 0, 1, 2, or 3 because I'm not going to be negative confident, right? But if I'm 1 confident, or if I'm closer to 0 in terms of confidence, I say, oh, I'm not really that confident. You know what I'll do? I'll buy a 10% position or 20% position. If I'm 1% if I'm level 1 confident, you know what I'll do? I'll buy a 33% position or a 25% position. If I'm level 2 confident, I'll buy a 75% position or a 50% position. If I'm level 3 confident, I will hit it full-blown, entire position at 458, right? But in doing so, guess what inherently I've done? If I go full position at 458, guess what I'm automatically, what do I have to do? If I go full position at 458, I have to risk 3%. I don't want to risk 3%. I want to risk 1%. So the answer to your question is, I can't be entirely confident in GBR. So I say to myself, how confident am I into GBR? 1, 2, or 3? If I'm 1, I'll put 5. I'll put 5% of my account into it. If I'm 2, I'll put 10% or 15% of my account into it. If I'm 3, I'll start with 20 or 25 or 30% of my account. See, this is what gives me control of the trade. If I only buy 25%, and this goes down to 452, guess what I'm doing? Buying another 25%. Now my average is 455, and I have a 50% position. So if we go down 10 cents, right? 10 cents on $4.58 is 2%, but I only have a half position. So if I'm taking 2% loss on a half position, what am I really taking? % loss. Do you see how my trade is designed for the trade that I'm trading? I did it. Me. I did this. I designed this. I created this trading. Me. This is my strategy. I'm doing this. Me. Right? Make sense?
Very helpful. Thank you.
So when you're sitting in the trade, like you said, I can tell you right now, I don't even need to know what happened, but I can tell you, you became not necessarily complacent, but you became overly confident in your ability to determine whether or not you're going to be right or wrong. When in all reality, if you were only holding a 20% position and then it tanks $2 on you, what does that mean? What could you have done? You just get another. If it takes $2, you get your 80% of position $2 lower, and now you got a sick fucking average if this thing wants to trace, right?
Yeah, no doubt. That's literally what happened. I mean, it was a demo account, so that was part of the psychology. But yeah, no, absolutely right. That's what I started off with, and then I averaged down. You just buy a larger position, and it's like nothing even happened. Your average is good.
Completely different trade. Because, like I said, now you were holding. Like I was gonna tell you what you did, but I knew that you did that, right? You over leveraged yourself to try to help your trade, but you did that on a chart that doesn't deserve that kind of respect, right? If you want to add to a losing position, you do it to a stock. I'm not saying that you can't do it to Apple, Tesla, or Facebook. Do you do it to GBR? Fuck no. Who the fuck is losing in a GBR position and then adds to it? Are you kidding me? This stock was at $1.50 last week, right? It doesn't deserve that, right?
Very fair.
What it deserves is to be treated like the piece of shit that it is. You buy 20% of your position at a time. Chances are it's going to shit on you 5 fucking times. If it shits on you 5 times and you're loading 20%, by the time you're fully loaded, you'll be down 1% you'll be down 0.99%, and it will be ready for a rip up. Make sense?
Absolutely. Thank you, Frank.
By that time, I'll have a full position. I'll be down 0.99%, and guess what? If we break down and I go down 0.01, 1%, I'm just selling. That's it. It's over. That's it. It's done. The trade is over. I'm down 1%. Because I fully loaded. I have no control over my trade. Once you're fully loaded, you put your entire account. Dude, capital is literally our tool. You give a construction worker a hammer and a piece of wood, he'll build you a shed or something. You give a trader money, and he'll trade it. Trading money is your tool. Like, what pisses me off about Skyper, and I hate to put you on Skyper, is that Skyper has the tool, right? She has money to invest, and then she doesn't fucking build anything with it. She literally just says, oh, I'm going to put this tool, I'm going to take my tool, I'm going to go put it in this piece of shit shed, and I'm going to let it sit there. Why the fuck would you do that? Get your tool out of the shed and put that thing to fucking work. If your tool is sitting in a shed, not making you any fucking money, not building you any houses, take the tool out of the shed so that you can build a fucking house. Makes sense? You got it. You have to. You have to. The only thing you can do. It's the only thing you have. Your tool.
Okay, now let's go to, I have 3 trades I can do a week in Robinhood. If I'm in and out in 3 trades in the first 15 minutes of the day, I don't get to trade until the next Monday.
Who cares? If you're in and out...
I can't hear you, Frank.
What?
I can't hear you.
Yeah, you were going in and out, but I think you're good now.
Oh. If you're using all of your day trades on Robinhood on your first day, who cares? Do you know what matters? Is if you use your 3 day trades on Robinhood, you're profitable. That's all. If you use your 3 day trades and you're profitable, guess what? Sit back, relax, and give Robinhood 5 days to give you another 3 trades. When that comes, use the 3 trades and focus on being profitable. Don't just sit on a fucking trade. Oh, I bought this, but I don't want to waste my day trade. That is the stupidest fucking thing that I've ever heard. If you bought something and you want to sell it, and your justification is, I don't want to waste my day trade? What the fuck? Your job is a day trader, and you're telling me you don't want to day trade? So you're swing trading, is what you're telling me. If you're swing trading, then guess what? The amount of day trades that you have doesn't fucking matter. Understand? Skyper, you are swing trading things that you should be day trading. You're taking things that we're playing in the chat, like GBR or XBRO, all these things, and you're saying to yourself, oh, I can't day trade this because I don't have the day trading. I don't have day trades. So you're swinging it. You're swinging stocks that people are day trading. High volatility stocks that, guess what? You're fucked. If it's not swinging your way, you're fucked.
Okay.
From another perspective, Skyper, it's taken me a while and a lot of different successful traders like explaining to me why and like yelling at me saying like don't fucking just hold a trade or swing something that isn't up too much and using justification. And my conclusion is we're justifying this shit in our head. Same with people saying, oh, I'll use a psychological stop loss and shit for new traders. Like, it just doesn't fucking work. Same with Robinhood. Like, there's no reason that we could justify it in our mind, even if it's $10, $1, $100, you know? So one thing that you'll just probably come to after it all is like, we gotta just stop making excuses for ourselves and just fucking listen to the guys that know.
The only thing that you should listen to, fuck your, you know nothing. You don't know shit. The only thing that you should listen to is the chart, the indicators, what they're telling you, and the lesson that I'm giving you. That's it.
Right, but I don't know. So many things have gone down with SPY taking the tank, and I don't know if anything was a good thing to get into. You know, you don't really know in the morning.
You have no idea, Skipper. You have no idea. Do you know what I do every morning at like 3 or 2? Sometimes at like 3 or 4 a.m. You know what I do? First of all, I love stocks. Okay, My friend literally asked me last. One of my clients asked me last night. He said, "Frank, do stocks literally get you? Do they make you happy? Do they please you?" And I do. They please the crap out of me. You know why? Because every day I wake up and I check my phone. I go to bed at night and I think, "Wow, Frank, you studied so much stocks today, man. You learned so much. You're so wow, really good. You're on." And every morning, you know what the most exciting thing for me is? I open up my phone and I look at the stocks, right? And then I look at the stocks and I say, this stock did exactly what I thought it was going to do. Or I'd say, this stock did exactly what I didn't think it was going to do, right? I love that. I love it when the market tells me that I was wrong so that I can look at it and say, how can I be right next time, right? You're looking at the market. The market is telling you you're wrong, and you're saying, I'm not wrong. The market, listen to me, the market is never wrong, okay? You're wrong. If you're holding a position and it's going down, okay, and you don't sell it, the market is not wrong. You are wrong. Make sense?
Yeah.
No idea what these stocks are doing. That's why I'm up at 3 o'clock, 4 o'clock in the morning. I literally roll over in my bed, I check my phone, I see what prices the stocks are at, then I fall back asleep. I wake up every 30 minutes from that point on to check, to see, to measure what these stocks are doing. Because I don't know shit. I look, see, to teach, to learn, to figure out what I think that I know. So that I know it. Right?
You're right.
You don't eliminate your hopes. Always convince yourself that the trade that it will never come back. Always tell yourself that. Don't justify shit to yourself. Don't justify shit. Always assume the worst. If you assume the worst, guess what you'll always find yourself doing? Whatever happens to you, if you assume the absolute worst, whatever happens to you will be a blessing. And that's what I do. Every single trade that I take, I try to assume the absolute worst. Absolute worst. You know what happens more times than not? I'll see a super, super risky trade, like GBR, for instance. Super risky trade, right? GBR. Right? Super risky. And I'll say, okay, I'm going to buy you, GBR, but I know you're super risky. I know that if I buy you, you get down $2. So I'll buy like a 10% or a 20% starter position. And you know what happens? It rips up. Now I'm only holding 10 or 20% of my position. Do you think that I sit there and I say, obviously I'm like, shit, I wish I loaded more. But do you think I sit there and I look at that money and I say, no, don't make $50. No, don't make $100. That could be $500. That could be $1,000. Do you think I do that? No, I say, 20% position, I'm riding it up. I don't give a fuck. I'm making $50. I make $100. Right? Because it doesn't matter. I don't care. It's not like I'm going to say, oh my god, I can't believe I didn't realize that was a perfect entry. I had no idea it was a perfect entry. In fact, I thought it was a terrible entry. That's why I only put 10 or 20% of my account in it. But I was wrong, and it worked out. And I'm profitable because of it. You understand? I assume the worst case scenario. Anything that happens to me is a good thing. Right? If I buy 20% and the stock goes down $2, guess what? Great buying opportunity. Right? Because I'm taking control of the trade. Now I can just buy another 20%. If I think that that's the definitive bottom, buy 80% and I'll use a tight stop. Because now I have a full position. Right? Don't hope. Don't dream. Don't justify. The job is called a day trader. Every day, get on your phone, get on your computer, get in front of your computer, and trade. Don't hope. Don't dream. If you want hopes and dreams, you need to be doing something else. I don't know. Go fucking, I don't know. Try to become a superstar or something. I don't know. Dreams. Try to become Nicki Minaj. That's it. If you recognize, like, LeBron James, for instance. Like, LeBron James didn't know that he was going to be LeBron James, right? Just a regular African-American dude who was a little bit tall, had a really good range, right? I don't really know much about basketball, so I could be completely wrong about this. But he didn't know he was going to be a super good basketball player. But you know what he did? One day he picked up a basketball and said, you know what? I can do this. The next day, he picked up the basketball and said, you know what, I'm doing this a little bit better. Over time, LeBron James became fucking LeBron James. LeBron James had no idea that his name, LeBron James, would eventually mean something. All he knew is that day, he had to pick up the ball and start dribbling. He did that every single day. Every single day. He picked up the ball and he started dribbling. He didn't know he was going to be LeBron James. But he was going to be a basketball player, and he knew, as a basketball player, I need to play basketball. As a day trader, if this is what you want to do, no hopes, no dreams, you need to come in here every single day and trade. That's your job. Very simple, very cut and dry.
Okay, but I started as a long-term trader, and I started in Lockheed Martin. Okay, I took over my own money in 2009 when Lockheed Martin was $74. It's now $299. I know that by holding it, more than likely will go up.
Listen. There is a difference between Lockheed and Martin and fucking Atos or XPIO.
Right.
Do you understand that these stocks have not been operating for 50, 100 fucking years? They don't have billions and trillions of dollars in revenue and customer clientele. These are literally stocks that are fresh off the boat. We have no idea what they're worth. And you're holding them and trading them like Lockheed Martin? Are you fucking kidding me? You'd have to be an absolute ditz to trade Lockheed Martin and lose fucking money. Are you kidding me? You went from long trading, investing into companies like Lockheed Martin to day trading into companies like XPIO, whatever you're stuck in, I forgot the name.
Yeah.
Significant difference. You're literally going from, I'm going to do the easiest thing in the world in terms of trading to doing the most difficult thing ever trading. Do you see the deviation there? It's huge. It's foolish. It's honestly foolish. You cannot hold a stock like Lockheed Martin. You're influencing, you're justifying, you're telling yourself that the stock that you're holding is just like Lockheed Martin. Lockheed Martin crashed to $74, and now it's at $300. Lockheed Martin, it's a great company. They've been around for years. A nuclear bomb could hit tomorrow, and Lockheed Martin would probably still be standing. You know what I mean?
Right.
Atos and XPIO and GBR, guess what? Even if a fucking little bomb went off, GBR would be no more. That's what I'm saying. You need to figure out what you're doing. What you're doing is not day trading. What you're doing is bag holding. Investing is a fancy way of saying bag holding, right?
Mm-hmm.
Investing is good. You can invest into companies like Lockheed Martin all day. You could buy Lockheed Martin. Like when you were asking me, do you think Lockheed Martin is a good buy at $285? Do you think it's a good buy at $290, $295? Lockheed Martin, if it's at $300, and you ask me, do you think Lockheed Martin is a better buy at $285? I'll say to you, yeah, it's a $15. It's a $15 better buy. That's it. That's all. That's it. You know how I know that? Because the price of Lockheed Martin has been around for however. So chances are the price that it's telling us that it's at is, if you get a lower price than that, it's probably a good buy. But that's not the case with Atos or whatever you're holding, XPIO. That's not the case with those. Those stocks get serious volume. They get overbought. They get overextended, and they leave people like you in the dust, looking at their hands and saying, "My hands are fucking bleeding because I'm holding knives." You know what happens if I catch it? If I buy a stock and it knifes on me, I literally get rid of it as quickly as possible. If Frank goes to catch a knife and then Frank cuts his finger on the knife as he's going to catch it, Frank says, "Fuck that knife." If I go to catch a knife and I don't get it by the absolute handle, if even a little smidgen of that blade hits my hand, I'm completely out of the trade. Fuck that. Why would you long bearer stock? Just like, why would you buy whatever you bought, at its super top. You literally bought the hype. You bought everybody's hype. Oh, this is going to the moon. That's where you were buying when this was going to the moon. If you're buying when this is going to the moon, guess what? It's already on the moon, and you just bought the top. If people are telling you that this stock is going to the moon, guess what? 99% of the time, the moon is there. They're trying to support their position and get the fuck. They're going to bring that stock back to Earth. When it comes back to the Earth, they will be happy because they got out, and you will be holding your tears. Make sense?
Makes sense.
And the thing that kills me, taking control of the day and position sizing. You can put Lockheed Martin, like I said, very safe company, probably going to continue to operate for as long as society is, the way that it is. We can't say the same about these other companies. Something can happen to these companies. We have no idea. And you're probably, I don't even know, but for instance, something like fucking GBR or XBIO or Atos, you should be putting less than 1% or 2% or 3% of your total account. Less. If you're putting 3% or 5%, it's too much. It's too much. Why do you need to put 5% of your account into something that's going to run 200%? It's crazy. It's crazy. If you put, and the ideology is, well, if I put 100% of my account into something that's going to run 200%, I'll double my money. Yeah, that can happen. You're also doubling the amount of risk that you take, right? If you accept the fact that you can enter a trade 100% on a penny stock and double your money, guess what you also need to acknowledge? That you can enter the stock 100% of your position and lose every single dollar you have. Unless you plan on keeping 100,000 shares at 0.0000. Because I've seen it happen. And then they won't even let them sell it. They'll close it down and you leave $0 back. Alright, any other questions? I'm almost done here. 10 minutes.
Thanks, Frank.
You're welcome, Sniper. I'm sorry I'm so hard on you. I just want to really get you. You need to wake up.
No, I know today's lesson.
I love when people give it to me straight and they're hard on me. You need it.
I would just so rather have somebody that speaks from their gut and not somebody who sugarcoats it. So.
Amen, Skyper.
I really appreciate it.
Yeah, my pleasure. Honestly, the fact that you
fading in and out.
That's make me even happier. So, get executing, wash your hands, get out of all those shitty positions, never look back at them, because you're not investing in them. You don't care how they do in the long term. If that's what you want to do, if you want to be a day trader, you don't care. If you're going to be a day trader, and I don't mean to be foul or rude, you literally need to treat a stock like a one-night stand. Every single time. Even if you've already slept with it. When you go back to it, treat it again like a one-night stand. No connections, no emotional attachment. You get in there, you do your business, you get out. Literally. That's it. Go in, make money, go out. Have a nice day. That's it. You don't make it breakfast. You don't fucking do any of that shit. And if you go back to it, like I said, if you go back to it, you treat it like it's a completely different animal. It's not Becky that you did last week. It's still Becky, but she's not the same person. She's turned into a real bitch since. Stocks the same way. You go in, you buy a stock, you kill it. You go in, the next time heavier, using your profits, whatever. The exact opposite will happen. You'll get screwed. Treat it like a one-night stand. Get in there, make your money, get out. That's it. And like I said, you'll never be upset this way. Never be upset. As long as you use protection and you don't catch an STD, aka a bag hole, you're good to go.
Well, some of them you can take antibiotics for, but
If you don't, if you don't use protection, understand that you can catch something very, very detrimental to your health. For instance, GBR at $14. Buying GBR at $14 is a freaking STD. You'll be spending the rest of your life trying to get that money back. Trust me. Anybody else questions? Alright, boys and girls, we're shutting her down.
alright, I'll be around for a bit. Thanks a lot, Frank. You killed it. I really appreciate it.
Oh, my pleasure, man. I hope you got it. All very welcome. And Skyper, you know that it sounds kind of silly, right? Like, this is going to sound really silly. If you're going to use an investment strategy on day trading, literally you can do it. You know how you do it? Whenever you feel like you want to buy or invest into that company, short it. Whenever you feel like you want to short it or not, destroy the company, long it. You'll literally make money. It's silly, but I promise you well.
Okay, I'm having a hard time getting out of this. I have waiting for presenter on the screen.
Oh, I closed it down.
I know. How do I get down? Maybe Control-Alt-Delete. Let's see if that works. Well, that didn't work. Control-Option-Delete. No. Shift. Okay. I don't know how I'm going to get out of here. Nothing. I don't know. It's not leaving. I have